Good morning, students. So students, welcome you all again in the live virtual classes organized by Board of Studies of ICAI. Students, we started this batch with the last session on 22nd July. So student, in the last session, we have covered introduction of Ind AS, right? Roadmap for Ind AS. That what is about Ind AS and what is the applicability roadmap of Indian accounting standards. Today we are going to cover the introduction to Schedule 3, right? And then we will move to Ind AS 1 presentation of financial statement. Students, Ind AS 1 talks about presentation of financial statement and Schedule 3 also talks about format of financial statement. It means if you have to prepare the financial statement or if you have to audit the Ind AS financial statement, then you need to apply Ind AS 1 as well as you need to apply Division 2 to Schedule 3, right? These two authoritative guidance you need to apply for the purpose of preparation and presentation of financial statement. Okay. So let me summarize the context and then I'll move to Schedule 3. Friends, in Schedule 3, you must see a chart on the screen. In Schedule 3 is governed by Companies Act 2013. Okay. So Companies Act 2013, what was the prior Companies Act prior to 2013? Are you aware about the Companies Act prior to 2013? Prior to 2013, we have Companies Act
1956.
1956. In Companies Act 1956, there was Schedule 6. Schedule 6 was there, okay, which was guiding us how to present our financial statement. But when this Companies Act 2013 came, it was applicable from 1st April 2014. Schedule 3 was introduced, which was guiding us for the format of the financial statement. Now, friends, this was the beginning of 2014. Okay. In 2015, 16 February 2015, Indian accounting standard were notified. Okay. Which was applicable mandatorily from financial year 16-17. So when these Ind AS were notified, Ind AS were substantially different than accounting standard. Like in the last class, I told you there are accounting standard, there are Ind AS also. There are two reporting framework in India, which is prevailing in India. Okay. While Ind AS are applicable to listed companies, unlisted companies whose net worth is more than 250 crores. We had all these discussion, right? You guys are aware of. So friends, these Ind AS were largely substantially different than accounting standard. So there was a demand that please provide us a format of financial statement according to Ind AS also. So when this Ind AS notified, Ind AS made applicable to Indian companies, listed companies, big companies. So then Ministry of Corporate Affairs has also notified a new Schedule 3 and Ministry of Corporate Affairs came up on 6 April 2016 with a notification, and there it says that whatever Schedule 3 we have given you earlier, that Schedule 3 will be nomenclated as Division 1 to Schedule 3. Why? Earlier there was only one Schedule 3, but now we are giving you second Schedule 3 also. So then they told that whatever old Schedule 3, which was introduced on 1st April 2014, that will be named as Division 1 to Schedule 3. And whatever we are giving you today on 6th April 2016, it is nomenclated as Division 2 to Schedule 3. Is that clear? Right? Is that clear? And what is the purpose of Division 2 to Schedule 3? Division 2 to Schedule 3 is applicable to the companies on which Ind AS is applicable. This was not for NBFC companies. Okay. Division 2 to Schedule 3 was applicable to the companies other than NBFC companies on which Ind AS was applicable. Then on 11 October 2018, then subsequently effective from 1819, Ind AS on NBFC companies was also made applicable. कब से applicable हुआ? 2018-19 से. From 2018-19, Ind AS on NBFC companies was also made applicable. So then if NBFC started demanding, where is our Schedule 3? We are NBFC companies and our business model is significantly different than the other companies' business model. We are more into cash, loans, right? We are more into treasury kind of a business. So where is our Schedule 3? Then on 11 October 2018, a new notification came and it says that whatever we have given you earlier, that is division 1 to schedule 3, division 2 to schedule 3, that will be continued as it is. And today we are going to launch the third schedule 3 and it is named as division 3 to schedule 3. And this division 3 to schedule 3 will be applicable to the format of the financial statement of NBFC companies. Which NBFC companies? And those NBFC companies on which Ind AS is applicable. Are you clear about division 1, division 2, division 3 of schedule 3? Are you clear about these things?
Yes, sir.
Everybody? So Ankit, Praveen, Saminathan, Pitambar,
Yes,
Chitra, Manish, Leela, Anushi, Geet. Everybody is clear? Can you please confirm on the chat box? Very good. Right?
yes, sir. Clear, sir.
So my dear friends, whenever you are going to prepare your financial statement or you are going to audit your financial statement, then what is applicable? If it is a company, then Schedule 3 is applicable. Schedule 3 is applicable. Okay. So there are in Ind AS, there are two authoritative guidance for the presentation of the financial statement. What are those two authoritative guidance? Schedule 3 and Indian Accounting Standard 1. The title of Indian Accounting Standard 1 is also presentation of the financial statement. Okay. This Schedule 3 is part of Companies Act 2013. It prescribes you financial statement, format of financial statement, right? And we have Division 1 to Schedule 3. Division 1 to Schedule 3 is applicable for the companies, which are preparing their financial statement as per accounting standard. Which companies, can anyone tell me? In India, which companies are preparing their financial statement as per accounting standard? Anushi, Geet. So Ankit is saying non-corporate. Ankit, I am talking about corporate. On non-corporate, Schedule 3 is not applicable. On non-corporate, Ind AS is not applicable. I am asking about which companies.
Sir, unlisted company whose net worth is less than 250 crores?
Absolutely right. Great. Unlisted companies whose net worth is less than 250 crore. Absolutely right. Second example. SME listed companies. Companies which are listed on small and medium enterprises stock exchange. They are also not liable to apply Ind AS. They are also not obligated to apply Ind AS. If they want to apply, they can apply. Otherwise, law does not mandate them. Right? Right, Saminathan?
Yes, sir.
Okay. So, Praveen, what is the third example? The third example where the companies are applying accounting standard today also is banks, is insurance companies. Yes or no? Yeah?
Yes, sir.
Yeah. So these are the three class of companies: unlisted companies whose net worth is less than 250 crores, bank and insurance companies, and small and medium enterprises and companies listed on a small and medium enterprise stock exchange. These are three class of companies which are applying accounting standard in preparation of their financial statement as of today as well. Okay. So which format these companies will refer? Which format? They will refer the format of Schedule 3, which was notified on 26 March 2014. Division 1 to Schedule 3. Division 1 to Schedule 3. Clear? Division 1 to Schedule 3. Okay. And friends, this Division 1 to Schedule 3, there was an amendment on 11 October 2018 also, and on 24th March 2021 also there are some amendment as well. Then what is Division 2? Division 2 is applicable to Ind AS companies, to the companies which are applying Ind AS other than NBFC companies. Friends, on which companies Ind AS is applicable? On which companies? Geet, on which company Ind AS is applicable? Manish, on which companies Ind AS is applicable? Please try to answer. Doesn't matter right or wrong. I'll give the right answer. If you are wrong, I'll give the right answer. You are here for learning, right? So Ankit is writing on the chat box that sir, listed companies are applying Ind AS, and companies having net worth equal to or more than 250 crores is applying Ind AS. On these companies, Ind AS are applicable. Okay. Yes. And if Ind AS is applicable to a company, then it is automatically applicable to its holding company and its subsidiary, joint venture, and associate as well. Correct? So if these are the companies, Tata Motors, Bharti Airtel, Vodafone Idea, Reliance Industries, Adani Enterprises, ONGC, these companies are applying Ind AS. Which format you will refer? You will refer Division 2 to Schedule 3. And when this Division 2 to Schedule 3 was notified, this was notified on 6 April 2016, because Ind AS becomes applicable in India, mandatorily applicable in India from financial year 16-17. 16-17 was the first year of Ind AS implementation on a mandatory basis. There are some amendment in Division 2 to Schedule 3 on 11 October 2018, and there was a huge amendment on 24th March 2021. In 24th March 2021, there was huge amendment in Schedule 3. Then friends, when Ind AS are notified on NBFC companies, then Division 3 was introduced. This Division 3 was applicable to NBFC companies on which Ind AS is applicable. Right? And then there is an amendment on 11 October 2018, and there was a major amendment on 24th March 2021. So friends, to cut a long story short, Division 1 is applicable to the companies on which accounting standards are applicable. Division 2 is applicable to the companies on which Ind AS is applicable other than NBFC companies. Division 3 is applicable to NBFC companies on which Ind AS is applicable. Always remember, there was one major error which was made in the NBFC company's financial statement by a CA firm, right? There was a CA firm in Mumbai, and they have got an assignment to prepare a financial statement of a small NBFC companies, which was unlisted NBFC and net worth was less than 250 crores. So Chitra, if there is an unlisted NBFC company and net worth is less than 250 crore, then what is applicable? Ind AS is applicable or accounting standards are applicable? Ind AS are applicable or accounting standards are applicable? So Chitra is saying, sir, accounting standard is applicable. Very good. Very good. Yes. And Ankit is also saying that, sir, accounting standard are applicable. You know what happened? So the principal, the chartered accountant, has given this task to the article, right? And he told that we got an assignment of preparation of financial statement for this NBFC company. Then please draft the financial statement of NBFC companies. That article has Googled format of financial statement as per Companies Act for NBFC companies. He had just written these words into the Google. And you know what Google provided? Google provided Division 3 to Schedule 3. आजकल आपने सुना होगा ना, सही प्रॉम्प्ट देना पड़ता है तभी आपको सही आंसर मिलता है. You have to give the right prompt. So Google has provided Division 3 to Schedule 3. And that article trainee has prepared the financial statement as per Division 3 to Schedule 3. And on that company, Ind AS was not applicable, accounting standard was applicable. And even chartered accountant has seen those financial statement, and chartered accountant has filed those financial statement in the MCA. Then they got the notice, the company got the notice, and the auditor got the notice that the format which you have referred, the framework which you have referred, that is not right. Okay. So the problem is that article and that chartered accountant was not aware of there are division 1, there are division 2, there are division 3, right? And division 3 is applicable to NBFC companies, but not every NBFC companies. Division 3 is applicable to the NBFC companies, to those NBFC companies on which Ind AS are applicable, right? So the companies on which accounting standard are applicable, then division 1, Chitra has rightly mentioned, then division 1 is applicable. Have you got what is the error which was made? Yeah. So friends, my request to all of you, today we are living in a world where practicality is very important, right? When you sit in an interview, when you sit in exam, so probably theoretical question may not be asked. I mean to say, probably the practical application is required. So you need to understand at times, people made this error in interview, people made this error in exam, people made this error in the real life also, because they just write format of financial statement of NBFC companies. They don't write format of financial statement for NBFC company which are applying accounting standard and or ICAI, right? Format of financial statement of NBFC companies which are applying Ind AS. So when you complete this statement, then you will get the right output. Do you agree with me or agree to disagree? Agreed? Agreed? Yes. So friends,
Yes,
now we have understood the universe of schedule 3, division 1, division 2, division 3. In your study material, in your CA curriculum, what is relevant? Division 2 to schedule 3 is relevant. Okay. Division 1 is not relevant. Why? It was for accounting standard, and division 3 is also not relevant for your purpose. Okay. So we will discuss what we will discuss. We will discuss division 2 to schedule 3 in summarized manner. Okay. Very good. Very good. Let's move further. So my question to all of you, what are the element of the financial statement? You are the CA final student. So my question to all of you is, what are the elements of the financial statement?
balance sheet, a statement of profit and loss and other comprehensive income, a statement of cash flow, a statement of change in equity, and notes to account.
Sir, asset, liability, equity, income and expenses.
Okay. So who's there? What's your name?
Sir, Swaminathan.
Saminathan. Absolutely right. So my question was not what are the component of the financial statement. My question was what are the element of the financial statement. Element, panch tattva, right? Element. So element of the financial statement is what? Element of the financial statement is there are 3 elements to the balance sheet. Asset, liability and equity, and 2 elements to the profit and loss, income and expenditure. There are 5 elements to the financial statement: asset, liability, equity, income and expenditure. These are the 5 elements of the financial statement. Name anything. Name any transaction. Sir, yesterday I paid 100 rupees to buy stationery. So you paid 100 rupees. So what has gone out? What has gone out? Cash has gone out, right? So what is cash? Cash is an asset which has gone out. You incurred 100 rupees on purchase of stationery. What is the nature of stationery? Expenses, right? Expenses. So friends, so Geet, balance sheet, P&L, SOCI, notes to accounts, cash flow, these are the component. These are not the element. So what are the element of the financial statement? Asset, liability, equity, income and expenditure. These are the element of the financial statement. Now, what are the component of the financial statement? If somebody will ask you whether component of the financial statement are defined anywhere. Yes or no?
Ind AS 1.
Yes. Component of the financial statement is defined in Ind AS 1. Ind AS 1 is a standard on presentation of the financial statement, and component of the financial statement are defined in Ind AS 1. And what are the component which you are talking about? Balance sheet, statement of profit and loss, statement of changes in equity, statement of cash flows, and notes to accounts. My dear friends, what balance sheet talks about? What balance sheet gives you? Balance sheet gives you financial position. Balance sheet gives you financial position. And the guidance on the balance sheet, the guidance on the format of the balance sheet is given under Ind AS 1 as well as Schedule 3. Okay. So the format of the balance sheet is given in Schedule 3 and the guidance relating to the presentation is also given in Ind AS 1. So whenever you have to prepare the financial statement under Ind AS, then you need to refer two things. Number one, Schedule 3 format and Ind AS 1 also. Okay. Statement of profit and loss. One question, balance sheet is at a point in time or over a period of time?
At a point in time.
At a point in time.
Yeah.
You are Praveen, right? Yes, you are absolutely right. Balance sheet is at a point in time. So Manish, balance sheet is not over the period. Chitra, you are right. It is at a point in time. That is why balance sheet always prepared as it. Balance sheet as it. Balance sheet is never balance sheet for the period. Balance sheet is always balance sheet as it. Right? So balance sheet shows a financial position at a point in time. At a point in time. Okay? Clear? Statement of profit and loss. Statement of profit and loss is at a point in time or over the period of time?
Over the period of time, sir.
Over the period of time. That is why statement of profit and loss is for the period. It is not as it. Whenever you see any annual report, so statement of profit and loss for the year ended, for the period ended. Okay. So who has given you the guidance on profit and loss? Ind AS 1 gives you guidance on the presentation of profit and loss, and Schedule 3 gives you the format. Schedule 3 gives you the format relating to the presentation of a statement of profit and loss. There is a new section. There is a new section in the statement of profit and loss. Can you tell me what is the new section in Ind AS? There is a new section. Geet is saying other comprehensive income. Saminathan is also saying other comprehensive income. Yes, you all are right. It's other comprehensive income. So my dear students, I want everybody to get engaged, right? I can see 5-6 students are very interactive, very participative, but please participate, please interact. You will get a good learning, believe me. You will get a good learning, believe me, right? So Jyoti was also answering, but she was answering on the offline portal, right? So Jyoti, you can also answer here. You can also write on the chat box. Okay, good. Yes, so other comprehensive income, it's an extended P&L. It's the extended version of P&L, and there is a new concept which is other comprehensive income we will talk about. Then the third one is statement of changes in equity. Whether statement of changes in equity is at a point in time or over the period of time?
At a point of time.
It is over a period of time. The word is changes. It shows the reconciliation. It shows the movement. Okay. So whenever you see in any annual report, it is written that statement of changes in equity for the year ended, for the period. Okay. So statement of changes in equity is also over the period, not at a point in time. Okay. It is not as it is for the year ended, for the period ended. Is that clear? Is that clear? Clear in mind or clear from mind?
Clear in mind, sir.
Yes, sir.
Okay, okay. Friends, again, the guidance on the presentation of statement of changes in equity is given under Ind AS 1, and the format of statement of changes in equity is given in the Schedule 3. And this statement of changes in equity is a new statement under Indian accounting standard. Whether this statement was there in accounting standard financial statement, उसमें था क्या? No, it was not there. It was not there in the financial statement on prepared under accounting standard. उसके component में नहीं था. But whether this work is new, is new.
No.
This work is not new. What is statement of changes in equity? It shows the movement. It shows the reconciliation of equity share capital and reserves and surplus, which is known as other equity. तो ये movement क्या आप notes to accounts में दिखाते थे? Accounting standard के financial statement में?
Appropriation करके दिखाते हैं.
Yes, appropriation. There is nothing called appropriation, right? In our division 1 to schedule 3, in our accounting standard financial statement, what we were doing in our accounting standard financial statement, this statement of changes in equity is a part of the notes to accounts. Now it's a main statement. Main statement का मतलब क्या है? Like balance sheet, P&L, cash flow, the auditor and the board of directors are also signing this statement. But notes to accounts के हर पेज पे थोड़ी साइन करते हैं, नहीं करते ना? It was not required. It is not required. Okay. So this statement of changes in equity, the work is not new. The component is new, right? So in division 1 to schedule 3, the format of statement of changes in equity is not given. Why? Because it is not there. But in division 2, division 3, it is given. Why? Because in Ind AS, it is one of the component of the financial statement. Is that clear? What is statement of changes in equity? It gives you the reconciliation, the movement in equity share capital as well as in reserves and surplus. Okay. Statement of cash flows. Friends, statement of cash flow is for the period ended, or statement of cash flow is at a point in time.
For the
Over a
period.
period.
For the period.
Statement of cash flows, it gives you liquidity position. It gives you liquidity performance, not position, liquidity performance over the period of time. That is why it is written that statement of profit, statement of cash flows for the year ended. Statement of cash flows for the year ended. Okay. Who has given the guidance relating to the format of the statement of cash flows? Who has given the guidance? किसने गाइडेंस दिया इसके बारे में? Who has given the guidance? Ind AS 1?
Ind AS 7.
Sir, Ind AS 7 given the guidance, sir.
So Geet, it is not Ind AS 3. It was accounting standard 3. वो AS में AS 3 था. In Ind AS, it is Ind AS 7. You know, Schedule 3 is silent on the format of the cash flow. Schedule 3 is not giving you cash flow. Schedule 3 says that please refer Ind AS 7 for the purpose of preparation of statement of cash flows. Okay. And in Ind AS 1, Ind AS 1 define the component, right? Ind AS 1 define that these are the 5 components of the financial statement. But wherever the section of statement of cash flow comes, Ind AS 1 says that please go into the room of Ind AS 7. Please go to the room of Ind AS 7. So Ind AS 1 refer Ind AS 7. Schedule 3 refer Ind AS 7. So who has given you the statement of cash flows? Ind AS 7 has given you the statement of cash flow. A statement of cash flow is always for the year ended, for the period ended. It provides you the liquidity performance. Okay. And then notes to accounts. What is the notes to accounts? Is it at a point in time or over the period of time?
Over a period of time.
It is both. In notes to accounts, your balance sheet related notes will also be there, na? Your P&L related notes will also be there, na? It is both. So your notes to accounts provides, that is why notes to accounts as it and for the year ended, right? So whenever you see some good companies annual report, you will find they write notes to accounts as it and for the year ended. Okay. So notes to accounts is both, because what is notes to accounts? It gives you the quantitative and qualitative details of balance sheet, profit and loss, statement of changes in equity, statement of cash flows, and other aspects like material accounting policies, accounting estimates, right? Then schedule of all the balance sheet items, breakup or schedule of all the P&L items, and the other details, other disclosure like related party disclosure, actuarial disclosure, gratuity का देते हैं ना, कैपिटल कमिटमेंट का डिस्क्लोजर, कॉन्टिजेंट लायबिलिटी का डिस्क्लोजर, सेगमेंट रिपोर्टिंग का डिस्क्लोजर, फॉरेन एक्सचेंज का डिस्क्लोजर, ये सब सुना सुना लग रहा है, सुना सुना लग रहा है. वेदर ऑल दीज थिंग्स आर हर्ड और ऑल दीज थिंग्स आर ब्लैंक. You're right, Geet. Fair value disclosure also. Whether these are heard or blank. सुना सुना है, सुना सुना है. Yeah, heard. Very good. So these are the component of the financial statement. Now, have you guys have enough clarity? The universe of Schedule 3, Division 1, Division 2, Division 3. Have you guys have a clarity on element of the financial statement, component of the financial statement, how many component, what says what, right? Which is the authoritative guidance? I hope you guys are preparing your notes also. Yes?
Yes, sir.
Do you
Yes,
have
sir.
enough clarity now?
Yes,
And
sir.
my dear friends, these are not only examination question, these are the real life questions, right? Where everybody, this entire world is expecting from you that you are a chartered accountant, you are a CA final student, you must be aware about these aspects, okay? Otherwise, if you don't know what to refer, where to refer, how will you refer? आपको ये नहीं पता होगा क्या रेफर करना है, तो कैसे रेफर करोगे, राइट? ओके, यस, गुड. Friends, now we'll understand the universe of Schedule 3. But before understanding the universe of Schedule 3, let me show you one real life, one practical annual report. Can I show you the annual report? One annual report?
Yes, sir.
Yes, sir.
Please.
Okay. So just allow me a minute. Let me open one of the annual report. Okay. Just allow me a minute. So let me open the annual report. I hope my annual report is visible.
Yes, sir.
Yes, sir.
So let me open the annual report, or this annual report is of the company which everybody is familiar with. What is the name of this company? Britannia Industries Limited. Have you ever ate the biscuit of Britannia Industries Limited? Britannia?
Yes, sir. Many times.
Many times. I had in the morning also, today morning also, yes. So let me show you the annual the financial statement of this Britannia Industries Limited. Okay. Yes. I hope this balance sheet is visible.
Yes, sir.
Yes. So you can see this is standalone balance sheet. This is the balance sheet. Standalone balance sheet. Balance sheet as it. Yes. As it, the single date 31st March 2024, 31st March 2023. Comparative, 1 year comparative is mandatory, right? And you can see this balance sheet, there is an assets, non-current, then assets are divided into non-current asset, current asset. Okay. Then this non-current and current is also divided into financial and non-financial. While Schedule 3 format says that whatever is the financial asset, you have to write financial asset section. But you don't need to write non-financial asset. वो understood है. Okay. Right. जैसे मान लीजिए जब आप पास हो जाओगे सीए फाइनल के एग्जाम में, तो क्या आपको बताना पड़ेगा? आप यही बोलोगे ना, मैं पास हो गया. आपको ये थोड़ी बोलना पड़ेगा मैं फेल नहीं हुआ. What you will say? You will say, I have passed, I have cleared the exam, I become a chartered accountant. You will not say that I haven't failed. You will say, I have passed. Correct? So, financial asset is required to be shown separately. Then current asset, equity and liabilities are there. Then equity and then liability. Liability is bifurcated into non-current and current. Equity is not required to be bifurcated into current and non-current, right? So equity is forever. Equity is always kind of a non-current. Okay. So it is a balance sheet, and this balance sheet is signed by Walker Chondiok and Company, and which is statutory auditor. Who are the statutory auditor? And This is also signed by the entire board of directors. Entire board of directors. Clear? Is that clear? Now let's go to the profit and loss, statement of profit and loss. You can see in statement of profit and loss, statement of profit and loss as it or for the year ended? For the year ended. Current year and last year. Revenue from operations, other income, expenses, then your profit will be there. Profit before exceptional item and tax, then there is an exceptional item, there is a current tax, deferred tax, there is a profit for the year, and there is one more section, other comprehensive income, other comprehensive income. Then there is a total comprehensive income, basic earning and diluted earning per share, and then this statement of profit and loss is also signed by the auditor and the board of director. Okay. Then my dear friends, we have a what? So we have a statement of changes in equity. Let me show you the statement of changes in equity. Yes, this is the statement of changes in equity. Can you see? Is it visible? Equity share capital, opening balance, changes in equity, then your closing balance. Okay. So opening reconciliation, then other equity, reserves and surplus, security premium, retained earning, capital reserve, capital redemption reserve, debenture redemption reserve, remeasurement of the net defined benefit liability or asset. Okay. It is there. Then there is a reconciliation. A reconciliation of reserves and surplus is there. And this statement of changes in equity is also signed by whom? Signed by the statutory auditor and signed by the board of directors. Then there is a statement of cash flows. What is statement of cash flow? Then there is a statement of cash flow. So what are the statement of cash flows? There is a statement of cash flow. Statement of cash flows for the year ended. Statement of cash flow for the year ended. Okay. Operating activity, investing activity, and financing activity. So statement of cash flow is also for the year ended. There are three kinds of activity we will also cover in Ind AS 7. And this statement of cash flow is also signed by whom? This statement of cash flow is also signed by auditor and the board of director. Auditor and the board of directors. Auditor and the board of directors. Right? And then there is a notes to accounts. There is a notes to accounts. And in the notes to accounts, there is a balance sheet related notes, as well as there is a balance sheet related notes, and there is a P&L related notes and other notes also. Okay. Is that clear? After looking at this annual report, is that clear?
Yes, sir. Clear,
Yeah?
sir.
Okay. Now let's get into the universe of Schedule 3. Universe of Schedule 3. Okay. And largely, I will be covering Division 2 to Schedule 3. Okay. Division 2 to Schedule 3. So after attending this session, you will be well versed. You will be 100% clear on what are the framework and which framework is applicable to which set of entity. Correct? Question number 1 is on the screen. Now let's play Kaun Banega Karodpati. Question number 1 is on the screen, and question number 1 talks about Schedule 3 is applicable to companies only, or it is applicable to non-corporate as well. This question goes to Khalid Vohra. Khalid, whether Schedule 3 is applicable to companies or it is applicable to non-corporate as well. Khalid, what is your answer? Khalid has given his answer, and so Khalid, Division 2 to Schedule 3, or let's forget about Division 2, let's talk about Schedule 3, all the divisions. Schedule 3 is under Companies Act, and Companies Act is applicable to corporate entities or non-corporate also. Whether on partnership firm Companies Act is applicable? Answer is no. Companies Act is applicable to companies only, and hence Schedule 3 is applicable to companies only. It is not applicable to non-corporate. So what is the right answer? What is the answer to question number 1? The answer to question number 1 is Schedule 3 is applicable to companies. It is not applicable to non-corporate. What are the non-corporate entities? Manish, what are the non-corporate entities? Partnership firm, proprietorship firm, Hindu undivided family, local bodies, trust, NGO, NPO, these are the non-corporate entities. Okay. How many divisions to Schedule 3 is there? And what is the applicability? How many divisions of Schedule 3 is there? Please tell me how many divisions. How many divisions to Schedule 3 is there?
3 divisions, sir.
3 divisions. Division 1, Division 2, Division 3. Schedule 3 है. Schedule का नाम भी 3 है. तो division भी 3 है. Right? And what is the applicability? Division 1 is applicable to whom?
AS compliant companies.
Division 1 is applicable to AS compliant companies. The companies on which AS accounting standard are applicable. Division 2 is applicable to whom?
Ind AS compliant companies.
Ind AS
Other than
compliant company.
Other than NBFC.
Other than NBFC. Not all Ind AS compliant companies. Ind AS compliant companies other than NBFC. Division 3 is applicable to whom?
NBFC companies. Ind AS applicable.
Not NBFC companies. NBFC companies who are Ind AS compliant. NBFC companies on which Ind AS is applicable. Right? Clear? When did Division 2 to Schedule 3 was notified? When?
It's an April 6, 2016.
Very good. 6 April 2016. 6 April 2016. Okay. 6 April 2016 is the date when this Division 2 to Schedule 3 was notified. 6 April 2016. Very good. Very good. Thank you, Geet. It is right. 6 April 2016. Whether Schedule 3 got amended post originally notified? If yes, when and when was the major amendment happened? Friends, there was a major amendment happened in all the division of Schedule 3, not only on Division 2, even Division 1 and Division 3 also. There was a major amendment. When that major amendment happened, and we will discuss some example of major amendment also. When?
In 2021.
2021, very good. But
24/3/2021.
Oh, nice. 24 March 2021. 24th March 2021. Which date? 24th March 2021. Yes. So that was the major amendment. But if I talk about all the amendment, yes, Division 2 was amended on 11 October 2018 also. There was a small amendment, and large major amendment was 24 March 2021. Okay. So that was the major amendment in all the Schedule 3, not only in Division 2, but rather in 1 and 3 as well. Lot of disclosure was incorporated. Lot of disclosure. Okay. Question number 6. Whether requirement of Schedule 3 needs to be strictly followed, or if there is any requirement of Ind AS and Companies Act 2013, can the Schedule 3 requirement need to be modified? For example, if Schedule 3 has given you some requirement, and there is the other requirement of Ind AS and Companies Act also, whether Schedule 3 requirement should be modified to comply with the requirement of Ind AS and Companies Act also? What is your view? What is your view? Question number 6. Friends, Schedule 3 says that my requirement is not maximum requirement. My requirement is minimum requirement. My requirement is minimum requirement. If there is any further requirement of Ind AS or Companies Act also, then Schedule 3 requirement has to be modified in compliance with Ind AS and other regulatory requirement. Okay. Clear? I think we left question number 5. whether Schedule 3 is applicable to standalone financial statement or it is also applicable to consolidated financial statement.
Sir, it's applicable for both standalone as well as CFS.
Yes, it is applicable to both standalone financial statement as well as consolidated financial statement, both, right? Because it does not tell you how to do the consolidation. It provides you the format of balance sheet, profit and loss, statement of changes in equity. It provides you some disclosure in the notes to accounts. Okay. It says that if you need to prepare the cash flow, then please refer Ind AS 7. So it gives you the guidance. Okay. So it is equally applicable to consolidated financial statement as well. Friends, question number 7. And in this question, majority of the student, chartered accountant got confused. If there is a conflict between Schedule 3 and Ind AS, which will prevail? Which will prevail?
Schedule 3.
Okay, so Geet is saying Ind AS, Ankit is saying Schedule 3, Rahul is saying Ind AS, Ritika is also saying Ind AS. Let me see if people have given answer on offline portal also. Okay, they are also saying Ind AS. Friends, the right answer is when there is a conflict between Schedule 3 and Ind AS will prevail. Schedule 3 says that whatever requirement I have given, this is the minimum requirement, not the maximum requirement. If there is any other requirement relating to Ind AS, then of course you need to comply with the requirement of Ind AS. Whenever there is a conflict, Ind AS will always prevail. Whenever there is a conflict. Let me give you an example. Have you heard about revaluation surplus on fixed asset? You must have heard about revaluation surplus. ये आपने accounting standard में भी पढ़ा होगा, AS में पढ़ा था ना? Revaluation surplus on fixed asset, right? So Schedule 3 says that if a company has done the revaluation, okay, and due to revaluation, the value of the asset increased more than 10%. The value of the asset increased by more than 10%. Then you have to provide the disclosure relating to the amount of the revaluation. Relating to the revaluation related disclosure, you have to provide when the revaluation is more than 10%. When the revalued value is more than 10%. This is the requirement of Schedule 3. Ind AS 16 requirement is if you have done the revaluation, then irrespective of the value, you have to give the disclosures. Now tell me, the company has done the revaluation, one of the company, and their revaluation surplus impact, their revaluation impact is only 5%. So my question to all of you is, Schedule 3 says that if there is more than 10%, then only you need to disclose. Ind AS is not giving you any threshold. Ind AS says that if there is a revaluation, you need to disclose. So what will be followed?
Ind AS mandatory.
Ind AS will follow.
So in this company where the revaluation impact is only 5%, whether we should disclose or should not disclose?
We should disclose that.
We should disclose. Yes. Ind AS will prevail. We should disclose. Okay. So Schedule 3 says that my 10% is not the maximum requirement. It's a minimum requirement. I mean to say कि अगर वो 10% से कम है और शेड्यूल और Ind AS कहता है तो आप डिस्क्लोज कर सकते हो. You can disclose. You have to disclose. Okay. Right? Is that clear?
Yes, sir.
Are you
Also,
clear?
yes, sir. Also, we need to disclose under the CARO report as well. If it is more than 10%.
Definitely. So CARO report is there, but I'm talking about the financial statement perspective, right? I'm not capturing the auditor perspective. I'm capturing the financial statement part. Okay. Yes. So whether these seven questions are clear? Any doubt? Are you enjoying the session?
Yes, sir.
Yes, sir.
Are you able to understand? Do you find this session useful and informative?
Yes, sir. Very useful.
Very informative and useful, sir.
And since morning, you got some new information?
Lot
Because
of.
because your life, your journey started with financial statement, end with the financial statement. Financial statement is the real truth. Correct?
Yes, sir. We are getting more input on practical aspects. Thank you, sir.
My pleasure. Yes. So friends, now let's go to the... Yes. Sorry.
I thought I was not audible. Okay, thank you.
Yeah. Question number 8. Whether any act or regulation requires a specific disclosure to be made in the financial statement of the company, whether it is required to be made in addition to those under Ind AS Schedule 3. It is not whether, if. It should be if. Okay? It should be if. If any act or regulation requires a specific disclosure, if any act or regulation requires specific disclosure, then if any act or regulation requires specific disclosure to be made, whether it is required to be made in addition to the Ind AS disclosure, answer is yes. Of course, yes. Okay. Which component? Now tell me. Question number 9. Which component of financial statement format is prescribed by Schedule 3? Now,
Balance sheet.
we know the component. Yes. Yeah, please tell me. Tell me.
Sir, balance sheet, profit and loss account, statement of changes in equity, and notes to the account as well.
Yes. So, which component? Balance sheet. Balance sheet format is given by Schedule 3. Balance sheet format. Then, statement of profit and loss account nahi, statement of profit and loss. Statement of profit and loss format is also given in the Schedule 3. Okay. Then, statement of changes in equity. Statement of changes in equity format is also given in the Schedule 3. Then, statement of cash flow. No. A statement of cash flow format is not given in the Schedule 3. It says that you need to refer Ind AS 7 for the purpose of guidance. Then notes to accounts, yes, for balance sheet, P&L and some other notes like debtor aging. Have you heard about aging related disclosure? Debtor aging, creditor aging, capital work in
Yes, sir.
progress aging.
Yes, sir. Heard.
Heard na? You must have seen also in the
Yes, sir.
financial statement, you are providing some aging for debtors. You are providing not due up to 6 months, 6 months to 1 year, 1 to 2 year, 2 to 3 year, more than 3 year. For creditor also, not due up to 1 year, 1 to 2, 2 to 3 and more than 3. So for capital work in progress also, you are providing CWIP, which is lying in the balance sheet, CWIP, which has not converted into PP since last 1 year, 1 to 2 year, 2 to 3 year, more than 3 year. So these kind of aging, who is giving you these kind of aging related disclosure? Schedule 3. For loans, you are also providing secured, unsecured, yes or no? For investment, market value of investment, okay? Your cost of investment, your script wise investment. Who is guiding you relating to all this disclosure? Schedule 3 is guiding you relating to all this disclosure. So Schedule 3 is giving you the format of balance sheet, format of P&L, format of statement of changes in equity, and it also gives you the guidance, the format on the notes to accounts. Okay. For cash flow, answer is no. Clear? Question number 10. Whether the item in the balance sheet needs to be bifurcated into current and non-current. Is there any guidance given in Schedule 3 regarding that? Tell me. Whether balance sheet item has to be bifurcated into current and non-current, yes or no?
Yes.
Current non-current में करना है नहीं करना है?
Yes.
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 Yes. The entire balance sheet has to be bifurcated into current and non-current. Entire balance sheet. Okay. And where the guidance is given? The guidance is given in Schedule 3 as well as in Ind AS 1. So I will cover this, that what is a current asset, what is a non-current asset. I'll cover this part in Ind AS 1. Okay. We will discuss in Ind AS 1. The definition of current asset is given. You remember current asset are assets which are realizable in within 1 year, within operating cycle. Have you heard about this concept? You must have heard about this concept in your accounting center also, yes?
Yes.
Which is held for trading like inventory, which is a cash or cash equivalent, What is a non-current asset? Any asset which is not current is non-current, right? What is a current liability which is payable within 12 months, within operating cycle, which is held for trading, right? When there is no contractual, when there is no, kind of a contractual right to defer the settlement. So we'll discuss all these aspects in Ind AS 1. But yes, our entire balance sheet has to be bifurcated into current and non-current. Asset has to be bifurcated into current and non-current. Liability has to be bifurcated into current and non-current. Whether equity needs to be bifurcated into current and non-current.
No.
No, sir, that is not an asset.
You are right, Praveen. Equity is not required to be bifurcated. There is no bifurcation of equity. No bifurcation means no bifurcation into current and non-current. But equity is always non-current, but we are not writing non-current. Okay. So the classification, the bifurcation is only for the assets and only for the liabilities. Understood? Yes?
Yes, sir.
Okay. Perfect. Perfect. Now let's move to the next question. What is the balance sheet, P&L and statement of changes in equity format in Schedule 3? Have I shown you the format with the real life example? अभी मैंने आपको दिखाया, फिर से दिखाऊं?
Yes,
Yes,
sir.
sir,
Britannia items.
Britannia. So this is the format. This is the format. Okay. So मैं आपको ये ब्रिटानिया का दोबारा दिखाता हूं. So what is the format? Your balance sheet format start with asset. Your balance sheet format start with assets. In ICAI, how the balance sheet start in ICAI? Division 1 का format क्या था?
Equity and liability.
Yes, equity. Equity comes first, then liability, then assets. Okay. But in division 2 to schedule 3, asset comes first. Why? हम लोगों ने format क्यों change कर दिया? Why? Friends.
IFRS compliant. Ind AS.
Friends, our Ind AS are the converged version of IFRS applicable to India. Our Ind AS are 99.5% cut copy paste of IFRS. So the global presentation of balance sheet is it start with the asset, then equity, then liability. So we have aligned our reporting. We have aligned our balance sheet presentation with the international presentation, global presentation, right? तो हमने क्या किया? Assets को पहले ले आए, then equity, then liability. So this is the format. 1 year comparative is required. It start with asset, then it start with non-current asset, then property, plant and equipment, CWIP, investment property, intangible asset, financial asset. The format also tells you that you have to bifurcate your assets and liability into financial and non-financial also. You need to call out financial, but you don't need to call out non-financial, right? वो अपने आप समझ में आ जाएगा. Okay, like deferred tax asset, other non-current asset. Then your current assets are there, inventories, then financial asset, investment, trade receivable, cash and cash equivalent, bank balances, loans receivable, other financial asset, other current asset, asset held for sale. Okay. Then there is a equity, then there is a liability. Okay, non-current liabilities, current liabilities. So these are there, right, friends? So this is the balance sheet format. This is the real life balance sheet format as per schedule 3. Okay. And you are also required to refer Ind AS 1. As I told you, Ind AS 1 also provides you the guidance relating to the balance sheet format, right? It does not gives you format, it gives you the guidance. For example, it will tell you what should be the minimum line item on the face of the balance sheet. So you just need to see that guidance. The format, the tabular presentation is given in the schedule 3. Then there is a P&L format. You can see the P&L format: revenue from operations, sale of goods, other operating revenue, other income, expenses, profit before exceptional item and tax, exceptional item, profit before tax. All these Roman numbering, where it is given this tabular presentation. This tabular presentation is given in division 2 to schedule 3. Then after profit for the year, there is a other comprehensive income. You know, our accounting standard P&L, our ICAI P&L closed. Our ICAI P&L ended up to profit for the year, profit after tax. But in Ind AS P&L, after profit for the year, there is a other comprehensive income also. There is a other comprehensive income also. And profit after tax means profit for the year plus other comprehensive income is known as a total comprehensive income, right? The word other comprehensive income and the word total comprehensive income, this was not there in where? This was not there in ICAI P&L, but this is there in Ind AS P&L. This format is given as per Schedule 3, Division 2 to Schedule 3, right? And then after total comprehensive income, there is a earnings per share, basic earning per share, diluted earning per share, okay? Is that clear? Is that clear? Then there's a statement of changes in equity where the reconciliation is given, and you can see in the statement of changes in equity, there is a reconciliation. This is the format of reconciliation. Equity share capital and other equity reserves and surplus, etc. Okay. Then notes to accounts. So these are the format which is given under Schedule 3, Division 2 to Schedule 3, balance sheet format, P&L format, statement of changes in equity format. And it also prescribes some guidance on the notes to accounts. I hope this is clear to everyone. Friends.
Yes, sir.
Shall I move further?
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
Question number 12. Whether any rounding of guidance is given in Schedule 3? If yes, what is the provision? Any rounding of guidance is given in Schedule 3. What's the provision? Saminathan is saying if it is less than 100 crore, nearest 100,000 lakhs. If it is more than 100 crore, nearest lakhs, millions or crores based on the total income. You are absolutely right. Okay. Yes, rounding of guidance is given in Schedule 3. And what is that rounding of guidance? Rounding of guidance? Let me show you the rounding of guidance. I hope this rounding of guidance is visible. Rounding off is mandatory. First of all, let me tell you, many companies, many small CA firms and their clients, they are still writing in absolute number 5,21,431. They are still writing. That is not correct. Rounding off is mandatory, first of all. But what is the unit of rounding off? Friends, it depends on the total income. If your total income is less than 100 crore rupees, then you can round off your numbers in 100, 1000, lakhs or millions or decimal thereof, right? So you can round off. If it is up to 100 crores, you can round off in 100, 1000, lakhs or million. Million means 10 lakh. Okay. Or decimal thereof means you can write in decimal also. Okay. Up to 2 decimals. If it is more than 100 crore, then you don't have the option of 100 and 1000. If your total income, turnover plus other income, which is total income, if your total income is more than 100 crores, then you need to round off. In lakhs, millions or crores or decimal thereof. What does this mean? Let me tell you what does this mean. Please confirm if my Excel file is visible. Please confirm whether my Excel file is visible.
Not, sir. Yes, now it's
Yes, sir.
Rounding off. Please write down in your notes also. Rounding off guidance. Guidance in Schedule 3. Situation 1. What is situation 1? Total income is up to 100 crores. Less than 100 crores, right? Total income is less than 100 crores. Up to means less than, okay? So this is the P&L of the company. P&L. P&L revenue is there. Okay. And what is the revenue? Revenue is 99 lakh 50,321. This is the other income. This is the other income. 23,23,232. So let me write this. 10. Okay. This is the total income. Make it as 88. Okay. This is the total income. And let's say there is an expenses. Expenses are, for example, 78,90,543. Okay. This is your PBT. PBT is this minus this. Then your tax expense. Let's say 25% of this. And then there is a profit after tax PAT. This is the situation. Now tell me whether these are the absolute numbers. Absolute numbers. Okay. Is this a right presentation? Writing on an absolute number, is this a right presentation?
No, sir.
No. This has to be rounded off. And total income is less than 100 crore. It has to be round off nearest 100. It has to be round off nearest 100. Nearest 100. Nearest thousands. और क्या होगा nearest 100,000 और nearest lakh.
Lakhs or million.
Nearest million. कैसे करें इसकी rounding off? If it is nearest 100, this divide by 100. Okay. This divide by 100. This divide by 100. This divide by 100. So instead of writing 88,50,321, if it is nearest 100, we can write 88,503 hundreds. If it is nearest thousands, what should we do? Divide by 1000. And your presentation could be at 2 decimal level also. If you want to remove the decimal, you can remove the decimal also. If you want to remove the decimal, you can also remove the decimal. It is not mandatory, right? It is not mandatory. If you want to present up to 2 decimal level, why companies are presenting up to 2 decimal level? The companies are presenting up to 2 decimal level because of the few number are small numbers. For example, अगर यहाँ पर नंबर 1 लाख होगा, बाकी सारे नंबर आपके बड़े हैं, और नंबर यहाँ पर 1 लाख होगा, तो और आप मिलियन में राउंडिंग ऑफ कर रहे हो, तो 1 लाख डिवाइड बाय मिलियन इज 0.1. तो अगर आप वहां पे राउंडिंग ऑफ में डेसिमल में नहीं करोगे, then this will become 0. Are you getting me? If you are rounding off nearest lakhs, then divide by 1 lakh. 1, 2, 3, 4, 5. 88.5 lakh. If you are rounding off nearest million, then divide by 10 to the power 6. 8.85 million. Now, can you tell me what is the benefit of rounding off? ये rounding off का benefit क्या है?
The space will get reduced, sir, or it's easy to understand.
Easy to understand. The space will get reduced. I totally agree with you. But it is easy to understand. If it is easy to understand, right? Easy to understand. Geet, you are absolutely right. If number is below rounding off norms, then disclosure is required. For example, with hash or asterisk, and you can just say that it is less than rounding off unit. You can say that. But the point is why companies are using decimal. The companies are using decimal only for showing the numbers till the last level of accuracy. That's the only thing. But yes, many companies are not showing, like we are not showing the number up to the rounding off level into decimals. In Indigo Airlines, we are presenting in absolute, in without decimal. Okay. So if situation number 2, total income is more than 100 crores, then you are only required to present into what? Nearest lakhs, millions and crores.
Lakhs and crores.
That why it is important, let me tell you. Revenue. Reliance का revenue. Reliance revenue is 11 lakh crore. 11 lakh crore. So 11 lakh, 1, 2, 3, 4, 5, then crores. 1, 2, 3, 4, 5, 6, 7. Okay. See, tell me whether this number is readable for a normal person who is, of course, not a chartered accountant, who is not a commerce background person, a shareholder, who is electrician, who is plumber, who is a doctor, whether this number is readable current year and the same number for the previous year also. If it should be an absolute number, whether this number is readable, 11 lakh crore. And yes, these are the real numbers. For the big companies, these are the real numbers. But if I'll do it, if I'll present this in rounding off, then tell me, is it readable? Then what rounding off is required? Nearest lakhs, nearest million, nearest crores, nearest lakhs, nearest million, and nearest crores. Nearest crores. This divide by 1, 2, 3, 4, 5. Right? Nearest million. This divide by crores. This divide by $11. Sorry. Is it readable now? 11 lakh crore. 11 million. Right? So you can see the highest level of rounding off will give you the easiest way to understand the number. 11 lakh crore. Right? So this is the mechanism of rounding off. Is this clear to everyone? Is this clear to everyone? Yeah? समझ आ गया?
Yes, sir.
Yes.
Okay, very good. Whether this rounding off is exceptional, is it optional or mandatory?
Mandatory.
The rounding off is mandatory. Whether rounding off is mandatory only in Ind AS or it is only mandatory in Division 1, Division 3 also?
Division 1 and Division 3 also. In all division.
Mandatory in all the division. Earlier in Division 1 it was not mandatory, but as of now in all the divisions rounding off is mandatory. So if you are still pursuing your articleship, if you will go for audit or if you got assignment for preparation of financial statement, then you need to see the compliance of Companies Act Schedule 3. And even though if you are auditing the company which is into accounting standard, this rounding off is mandatory. This rounding off is mandatory. Okay? Clear? Very good. Now, last question number 13, last of this slide. From where the meaning of the terms given in Schedule 3 needs to be referred, like related party, control, associate, PPE, property, plant and equipment, intangible asset, etc. When you go to Schedule 3, you will see the balance sheet format. In balance sheet format, property, plant and equipment is given, right? Intangible asset, biological asset, investment property. So many line items are given. Same in profit and loss also. In notes to accounts, there is a word called related party, etc., etc. is used. So from where the meaning of these terms will be referred? Schedule 3 has not given you the meaning.
Ind AS.
Yes.
Ind AS.
Schedule 3 says that whatever I am telling you, if you wanted to understand the meaning of those terms, what is related party disclosure, then please go to Ind AS 24. If you want to understand, I have given you that your property, plant and equipment is the first line item on the balance sheet, on the face of the balance sheet, right? You have to provide depreciation. You have to give the aging. If there is a revaluation, you have to provide the revalued number. You have to give the disclosures. Okay. Many disclosure is provided by Schedule 3, but Schedule 3 has not defined what is property, plant and equipment. Who has defined? Ind AS has defined. So Schedule 3 says that, my dear friends, for understanding the terminology which is there in Schedule 3, you need to refer the respective Indian accounting standard. You need to refer the respective Indian accounting standard. Okay? Clear? Whether any threshold for materiality is defined in Schedule 3. बताइए।
1% वाला था ना?
1%? You are saying right. 1% of what? 1%.
Sales.
Yes, the materiality is defined for income and expenditure. And what is the materiality? For income and expenditure, any item which exceeds 1% of the revenue from operation or 1 million, which is 10 lakh, whichever is higher. For example, if revenue is 1 crore, then what is the 1% of 1 crore? 1 lakh ना? 100 lakh का 1 crore होता है ना, तो 1 crore का 1% क्या होगा? 1 lakh.
Yes, sir.
So 1% of the revenue from operation, if revenue is 1 crore, what is 1%? 1 lakh. 1 lakh और 10 lakh, what is higher? 1 लाख और 10 लाख में बड़ा कौन है? 10 lakh, 10 lakh. So your materiality threshold is 10 lakh. But for Reliance, for example, the revenue is, let's say, 1 lakh crore. 1 lakh crore, or let's take a smaller number, right? Otherwise you'll get confused. For example, the revenue is 100 crore. What is 1% of revenue?
1 crore.
1 crore. If 100 crore is revenue, 1% of 100 crore is 1 crore. 1 crore or 10 lakh, what is higher? 1 crore is higher. So 1 crore is the threshold limit. In this case, 1 crore become the threshold limit for materiality. So any income or expenditure beyond 1 crore has to be presented separately in the notes to accounts. जैसे क्या होता है ना, stationery expenses, for example. Stationery expenses, you club this in a other expenses. Okay, you're not showing separately, for example. But if the stationery expenses is beyond 1% of revenue from operation or 10 lakh, whichever is higher, right? If it exceeds this threshold, then you have to present the stationery expenses separately. Right? Is that clear? So yes, threshold limit is given under Ind AS Schedule 3, Division 2 to Schedule 3, and the answer is given in question number 15 itself. Any item of income or expenditure which exceeds 1% of the revenue from operation or 10 lakh, whichever is higher, need to be disclosed. Is this requirement pertains to Ind AS और Schedule 3? ये requirement किसकी है? ये materiality Ind AS में दी है, Schedule 3 में दी है?
Schedule 3.
This requirement is given in Schedule 3. This requirement is given in Schedule 3. Okay. Is there any aging related disclosure given in Schedule 3?
Yes, sir.
Yes.
Yes.
Where? It is where it is given, Chitra. This question is to Chitra. Where this is given? Where this requirement is given? Chitra is saying this requirement is given for trade receivables and payables. Other than trade receivable and payable, is it given other than trade receivable and payable also? CWIP, intangible asset under development, capital work in progress, this requirement is given for those as well. For those as well, right? Aging for trade payable. Aging for trade payable. Outstanding for following periods from due date of payment. Less than 1 year, 1 to 2 year, 2 to 3 year, more than 3 year, and then total, right? So this is required to be disclosed as per Schedule 3. And this is one of the real life example, disclosure from TVS Motors Limited. They have given the disclosure, not due up to 1 year, 1 to 2 year, 2 to 3 year, more than 3 year in total. And in addition to aging, the trade payable has to be bifurcated into trade payable towards MSME other than MSME. And in MSME other than MSME, it has to be further bifurcated into disputed and non-disputed as well. Disputed and undisputed as well. Okay. Whether it is disputed, whether it is undisputed. Then aging for trade receivable. Less than 6 months, 6 months to 1 year, 1 to 2 year, 2 to 3 year, more than 3 year. From the due date of payment. Whenever the payment gets due, you have to see the aging after that. And this is from the Tata Steel. Real life example. Not due. For example, you have sold goods with a contractual credit period of 60 days and you have sold goods on 31st March. So whether on 31st March balance sheet you will show whether the goods have been due, the payment has due, the payment has not due. So it will be not due. Then less than 6 months, 6 months to 1 year, 1 to 2 year, 2 to 3 year, and more than 3 year, right? So this is how it has to be shown. Then disputed, undisputed also. Okay. Yes. So then let me see. CWIP and intangible asset under development. CWIP. Amount in CWIP line for less than 1 year, 1 to 2 year, 2 to 3 year, more than 3 year. Same goes with the intangible asset under development also. What is intangible asset under development? It is a CWIP of intangible asset. It is a CWIP of intangible asset, right? Capital work in progress of intangible asset. Clear? Is that clear? Are you able to understand the disclosures, the formats? Yeah?
Yes.
This is for your information.
Yes,
These are the
sir.
basics.
Yes.
Any
Yes,
doubt,
sir.
any challenge? Do you find it difficult to understand in these ICAI free live virtual classes?
No.
Yes, sir, definitely.
Or you want to pay thousands of bucks, 30,000, 40,000, 20,000, then you will be able to understand? So my
Very.
question is whether this is understandable or not?
Yes, sir.
Yes, it is understandable. Very useful.
So it's very much understandable, sir. You are giving in detailed way.
Very good, very good.
Very useful, sir.
Last question. What were the major amendment in Schedule 3 in accordance with the last amendment? As I told you, or as you guys have told me, on 24th March 2021, right? Division 1 was notified in 2014. Division 2 was notified in 2016, right? 6 April 2016. Division 3 was notified in 2018. And there was major amendment in 2021. Okay. As I told you, these aging were not required earlier. ये aging का कब आया था? This aging related thing came in. This aging related thing came in 2021 amendment. Trade payable aging, trade receivable aging, capital work in progress aging, whether the cost is exceeding budget or not. So all these disclosures came in 2021. So what were the major amendment in Schedule 3 in accordance with the last amendment means 2021. So major amendments are, what were the major amendment? This rounding of guidance was there clearly. Then equity share capital, you need to provide the promoter shareholding. Earlier, what happened? Earlier, whenever there is a change in share capital for more than 5%, or the shareholder who are holding more than 5%, the requirement was there to disclose. But now, what new requirement came in? If there is a promoter shareholding, for example, Ambani family is having a holding in Reliance Industries Limited. So they are the shareholder also, they are the promoter also, right? So the promoter holding has to be disclosed separately, and whether the promoter shareholding is reducing or increasing, the movement in the promoter shareholding is also required to be given. And it is not beyond 5%, even though if it is 0.05%, 0.01%, right? So then it is also required to be disclosed. Number one, irrespective of the percentage of holding, irrespective of the movement in the holding, you have to give the complete disclosure of promoter shareholding. Why it is important? Why it is important? It is important because earlier what happened, for example, you are the shareholder. Okay. You have invested in a company, but the promoter was not great. Promoter was doing a fraud and they were trapping the public shareholders. They made a falsified kind of a boom in the company. Their share price was going up. And they started liquidating their money. You as a public shareholder was thinking, oh, the money is going up and up, right? But it is completely artificial kind of a boom. Why? Because the promoter wants to liquidate the money, right? So promoter is continuously selling the shares, continuously. So promoter अपनी company के share कब बेचेगा? When he doesn't have any interest in the company, he desperately needs money, He doesn't have an interest in the company. That is why he keep on decreasing his holding, right? So that these kind of information will be visible completely to the shareholders, to the investors, to the user of the financial statement. These kind of amendment came into picture, right? That a separate disclosure has to be required for the purpose of promoter shareholding. Right? Making sense also, na? Making sense also?
Yes, sir.
So trade payable aging we talked about. Trade receivable aging we have also discussed. These are the examples which I have covered in the real life annual report like Tata Steel, TVS Motors. Disclosure with respect to immovable properties. Friends, the major issue was on immovable properties. Director has transferred his land in the name of the company, but actually, the title deed has not been transferred. Or if the title deed has not been transferred means stamp duty has not paid. Yes or no? आपने मुझसे एक बिल्डिंग खरीद ली, एक लैंड खरीद ली. Ankit has purchased a land from me. He has paid me the money, but we never, and he is using that building. He is using that land, but we never got it transferred in the name of the Ankit. It means we never go to the registrar office. We never get the registration done in the name of the Ankit. In that case, who has lost? Who has lost the stamp duty? Government, right? Why? Because it is not getting transferred in the name of the Ankit. So stamp duty leakage was there from the government. So government told the real black money lies in the immovable property. So if the company is having an immovable property, the company has to provide whether it is a PP, it is an investment property or other. Number 2, is it a land or is it a building? Number 3, what is the value? Number 4, in whose name the title deed is there? Whether the title deed holder is a promoter, director, or relative of the promoter or director, or employee of the promoter or director. You must have heard there was an investigation in the house of IS officer, and they found a lot of paper of properties who were in the name of the gardener, servant of those IS officer, because they cannot take the property in their name, and hence they took the property in the name of their cook, in the name of their gardener, in the name of their servant. Have you heard about these things? सुना है आप लोगों ने? ऐसे नहीं सुना?
Yes, sir.
They used to do these things, right? So see, these all things are coming from real life experience, from practical experience. Okay. So why red light was formed? Why this traffic signal was formed? Because people were not stopping anymore, and there was a collision of traffic. That is why this light was formed. Then whenever there is a red light, you need to stop. Whenever there is a green light, you need to move. अगर लोग अपने आप ही डिसिप्लिन के साथ चलते तो these lights were not formed. Why zebra crossing was formed? Are you getting me? Yes. So then you need to provide. If title deed is not in the name of the company, then whose name? Since when this property is holding in their name? What is the reason for not being in the name of the company, right? So these kind of disclosures are required to be given. I have a real life list disclosure from the Tata Steel Limited. They have given. These are the description of the property. This is the carrying value held in the name of whom, right? Whether promoter, director, or the relative, from which period, and what is the reason. Like they have acquired few companies. When you acquire few companies, then whatever immovable property are named in the previous company, they need to get transferred in the name of the current company. So they have written for certain properties acquired through amalgamation merger, the name change in the name of the company is pending. Right? They have given the reason that why the property held by Tata Steel Limited is in the name of Bhushan Steel, in the name of Bhushan Steel and Strips Limited, in the name of Tata SSL Limited, because Tata Steel has acquired these companies and the title deed has not yet transferred in the name of Tata Steel, right? Because it is in the process. Clear? Disclosure with respect to fair valuation and revaluation. You remember I told you if there is more than 10% of the revaluation, it has required to be disclosed. And you also need to disclose if there is a revaluation, whether revaluation is done by the registered valuer or not, right? Loans or advances granted to promoter, director, KMPs and other related parties. It is also required to be disclosed. that what is the amount outstanding, what is the percentage of loans and advances which is held by promoter, director, KMP or related party, so that the user of the financial statement, so that Ankit, Praveen, Saminathan, Chitra, Leela, Jyoti, right, Bandi, Khalid, Saurabh, everybody will be able to understand and know that out of the total loans and advances, what is the percentage which is given to the KMP, relative, etc., etc. Okay. So CWIP and intangible asset we talked about, we already discussed. Detail of Benami property, it is also required to be given. There was a raid in the company. Have you seen the movie Raid 2? Have you seen that movie? Have you watched that movie? Raid 2 of Ajay Devgan? So there was a raid which was happened. There was an investigation which was happened. In the investigation, the papers was found which says that the property belongs to this company, but the money has been transferred as a black money, as a cash, and it was not registered. So these are the detail of Benami properties. Okay. So this is required to be disclosed. Disclosure with respect to borrowing from banks or financial institution. If the working capital is more than 5 crore, then company needs to disclose. If the company has taken a CC limit, bank overdraft, or the company has taken some borrowings, then company has to disclose whether whatever statement was required to be filed, whether it was required to be filed in time. For example, when you took a CC limit, you have to file a stock statement, debtor statement, creditor statement. So have you filed in time, right? So whether your numbers, like your stock number, your stock statement, is it telling with your books of accounts? So all these things are required to be given. Willful defaulter. Have you heard about Nirav Choksi? सुना था आपने नीरव चौकसी के बारे में? Have you heard about that PNB scam? Nirav Modi, Mehul
Yes.
Choksi, not Nirav Choksi. I have merged two names.
Yes,
Nirav
sir.
Modi and Mehul Choksi. Vijay Mallya. Vijay Mallya, have you heard about Kingfisher?
Yes.
Yes,
So who are these person? RBI has classified each person as willful defaulter. They digested the lakhs and crores, thousands and crores of banks' money, and they flew away. Okay. So if the company is a willful defaulter, because RBI come up with a list of willful defaulter, then it is required to be disclosed. Relationship with struck off companies, right? If a company whose name is struck off from the registrar of the members of the company, then the disclosure is required to be given, right? That what is the nature, what is the name of the company which struck off? What is the nature of the transaction? Is there any balance outstanding? And the relationship with the struck off companies, right? So these are the new disclosure which was inserted in 24th March 2021 notification. This is kind of a disclosure of from Tata Steel Limited, right? Then registration of charges. You remember, you must be aware that whenever the company is taking any loan, then the charge is required to be registered with the registrar of companies, whether company has done that. Compliance with number of layer of companies. If there is any merger and amalgamation, so again, the compliance with approved scheme of arrangement, this is required to be disclosed. One of the most important disclosure, earlier the ratios were not required to be disclosed, but now there are 11 ratios which are required to be disclosed for every company, right? And it is for the current year as well as for the last year. And if there is a variation of more than 25%, it is also required to be disclosed, right? Variation of more than 25% is also required to be disclosed. Friends, this was Schedule 3. I believe you guys have got a good kind of understanding about Schedule 3. You are required to learn only this thing, right? So I have told you more than your Schedule 3, study material, I can tell you. Have you got the good understanding on Schedule 3? Presentation of financial statement, component of financial statement, element of financial statement, rounding off, aging. Yes? Who will prevail, Ind AS or Schedule 3? What needs to be referred? What
Yes, sir.
needs to be referred?
Yes.
Any question? Any question?
सर मेरा एक क्वेश्चन था वो प्रमोटर के रिगार्डिंग कि उनका
Yes.
अगर शेयर में चेंजेस होता है तो उनका लास्ट ईयर कितना था, करंट ईयर कितना हुआ, मतलब ऐसा कुछ कंपैरिजन है?
हाँ, yes. So let me show you that disclosure. Okay.
थैंक यू सर.
That is there. Detail of shareholding by the promoter of the company. This is the disclosure by one of the big FMCG company, Hindustan Unilever Limited. Okay. So as on 31st March 22, these are the promoters. These are the number of shares they hold. These were the percentage. This is as on 31st March 21, right? These were the number of shares they were holding. These are the percentage. In this case, there was no movement. But if there would be the movement, this percentage change would come here. So last year comparison, current year, number of share, percentage, change, or everything is required to be disclosed. Okay.
Okay, sir. Noted. Thank you.
Any other question? Any other question? Chitra, any question? Leela, Neha, Saminathan, Pitambar, Geet. Any question?
No, sir. Very clear, sir. Thank you.
Okay, thank you so much. So friends, let's have a 10 minutes break. And after 10 minutes break, we will start Ind AS 1 presentation of financial statement. Okay, let's have a 10 minutes break. It's 8:36 now. We will start at 8:46. Okay. 1. I hope my screen is visible. I hope my screen is visible.
Yes, sir.
Okay. Yes. So friends, division 2 we have discussed. Now we are discussing Ind AS 1. Okay. And this slide we have already discussed, right? On the day 1, we have discussed division 1 to schedule 3 is for AS compliant companies. And division 2 to schedule 3 is for Ind AS compliant companies. And division 3 to schedule 3 is for NBFC companies who are Ind AS compliant. And we have discussed division 2 to schedule 3, right? This is relevant for us. All these schedule 3 are notified by Ministry of Corporate Affairs. Format of financial statement are given under schedule 3, and the financial statement under Ind AS, there are two standards which are covering financial statement. Ind AS 1, which gives the presentation of financial statement, and one of the component, statement of cash flow, it is taken care by Ind AS 7. It is taken care by Ind AS 7. Is this fine? Is this fine?
Yes, sir.
Okay. So we have we have covered this part also, balance sheet. So balance sheet format is given under schedule 3 and guidance is also given under Ind AS 1. Statement of profit and loss, schedule 3 and guidance is also given under Ind AS 1. Statement of changes in equity, schedule 3 and guidance is also given under Ind AS 1. Statement of cash flow, it is given under Ind AS 7 only. Notes to accounts, schedule 3 and only Ind AS 1 or all Ind AS? All Ind AS, all Ind AS. Contingent liability. So it is not Ind AS 1. Ind AS 37 gives the disclosure relating to contingent liability. Related party disclosure. Ind AS 24 talks about related party disclosure. Okay. So all Ind AS. Clear? Whether this construct is clear to all of you?
Yes, sir.
Yes, sir. Clear, sir.
Now coming to the, so this part we have covered, coming to the Ind AS 1, presentation of financial statement. So far we have a good knowledge on the component of the financial statement, at least from the authoritative guidance perspective. Now we know what guidance is applicable to what, correct? So what is the agenda of this standard? Objective and scope we will cover. Purpose of financial statement will touch upon. Component of financial statement will discuss in detail. Definition few will touch upon. Overall consideration, feature of the financial statement, that what are the features of the financial statement, what is the overall considerations you will consider while preparing your financial statement, right? Overall considerations like going concern, accrual, these are the overall consideration. Then your structure and content, structure and content. Okay. So friends, like your structure and content means how your balance sheet will look like, what is the guidance on your balance sheet, P&L, this part will also cover. Okay. Coming to the objective and scope. What is the objective of Ind AS 1? Friends, this is the basic standard, but this is very important standard from the real life perspective. Okay. Probably will not see much question in examination from Ind AS 1. But this Ind AS 1 is kind of a very basic standard among all the other standard. It is very important to understand Ind AS 1. It gives you good clarity. For the other standard, for the presentation of financial statement, it will give you good clarity. And hence, it becomes very important and imperative to discuss and learn this standard. What is the objective of this standard? To prescribe the basis for presentation of general purpose financial statement. This standard prescribes the basis for presentation of general purpose financial statement. Okay. It ensures comparability with entities' own financial statement of previous period with financial statement of other entities. So talking about the first aspect first. Basis for presentation of general purpose financial statement. What is meant by general purpose financial statement? Let me give you an example. Mr. Mukesh Ambani. Have you heard about Mr. Mukesh Ambani? Who is the owner of Reliance Industries Limited? India's richest person. India's richest person. Yes. Mr. Mukesh Ambani called his CFO and he told, I need a balance sheet where you should present asset first, okay? And in the asset, you present current asset first and then non-current asset. And how you will start with in asset side, in current asset, I want you to present, first of all, trade receivable into two parts. Top 5 trade receivable as a one line item and the remaining trade receivable as a second line item. So there should be two line item for trade receivable. He was giving such kind of guidance and he told his CFO that Mr. CFO, give me this kind of balance sheet. Tell me whether the CFO will give that balance sheet or not to Mr. Ambani.
Not.
Yes, but for internal purposes only.
Whomsoever is saying no, you guys are thinking like a student. Okay. Think like a professional. Whether he afford to say no. क्या वो मना कर सकता है? What maximum he can do? What maximum he can do? He will put the disclaimer. What he will say? Okay, sir, I will prepare this balance sheet, but sir, this balance sheet is not in accordance with Schedule 3 or Ind AS 1. Right? Sir, you can use this balance sheet as a MIS. MIS तो हो सकती है ना, वो तो इंटरनल होती है कंपनी की. Yes or no?
Yes, sir.
Sir, you can use this as a tailor-made financial statement. You can use this as a tailor-made balance sheet. You can use this as a customized balance sheet, right? You can do all these things. You can do all these things. Okay. But sir, we can't give this balance sheet to the regulator. We can't file this balance sheet to SEBI, MCA. Okay. But you can use this balance sheet only for your decision making, only for your consumption, only for your purposes. Okay. Right. So, likewise, Geet is a shareholder of Reliance. Chitra is also shareholder of Reliance. Saminathan is also shareholder of Reliance, and I'm also shareholder of Reliance. We all are asking such kind of balance sheet from Reliance CFO. Whether CFO will provide us these kind of balance sheet?
No.
Of course
No,
no.
sir.
Of course no. So what he will provide to all of us? What we will get? We will get the balance sheet which is available to public at a large, which is published in the annual report, which is available on the website, right? Which is available for the general purpose public, which is available for the general purpose, right? Which is in accordance with Ind AS 1 and Schedule 3, which is in accordance with the country's law, right? Which is in accordance with the country's law, right? So friends, this is known as a general purpose financial statement, which is available to all of us. The special purpose financial statement are for the special purpose. For example, you are, for example, due diligence like Geet has told. Okay. For example, some regulator like IFSCA. So have you heard about Gift City in Gujarat? Gift City in Gujarat? Gift City entity.
Yes.
Yes.
Yes, sir.
So if an entity has created a subsidiary, okay, in Gujarat Gift City is a jurisdiction. It's a geography. So then Gift City regulator demand the financial statement of this company is in US dollar. What is the currency of India? INR. So the companies are preparing the financial statement in INR for the purpose of SEBI, MCA, etc., etc. But this regulator is asking US dollar financial statement. What we are doing, we are providing a special purpose financial statement in US dollar, right? It is only for the Gift City regulator. It is not for the entire public. It is not for the general public. It is not for the general user. But what we file in MCA, which is available for everyone, if you want to avail the financial statement of that entity, you can easily avail. You just need to pay a token of 100 rupees and you can download the financial statement. You can get the financial statement of even a private limited company. Okay, clear? So these are the general purpose financial statement, and special purpose financial statement is not available for general public at a large. These were not for general purpose. These were for a special purpose. So this standard only deals with Ind AS 1, Schedule 3. These are only dealing with general purpose financial statement. Second objective, to ensure comparability. To ensure comparability with entity's own financial statement of previous period. This standard has given you guidance. It says that, for example, you need to apply a consistent accounting policies. You need to apply your accounting policies consistently. You need to retain your presentation classification from one period to another so that the number should be comparable from the last year financial statement to the current year financial statement. This standard also says that this also ensures the comparability of one entity with other entity, right? For example, if you download the annual report of Bharti Airtel, it's a separate company, separate group. Reliance Industries, Vodafone Idea. Reliance Group belongs to Mr. Ambani. Vodafone Idea belongs to Mr. Birla. Bharti Airtel belongs to Mr. Sunil Bharti Mittal. Different person, different group, different geography, different locality. But when you download all these three annual report, in the financial statement, what is the first component you will find? What is the first component you will find?
Balance sheet.
Balance sheet. In all these different three companies, you will find the first component as a balance sheet. In everyone's balance sheet, what is the first line item you will find?
Non-current asset.
Non-current asset. In asset as non-current asset. In non-current asset, in all these three balance sheet, what is the first line item you will find?
PP.
PP. Very good. Property, plant and equipment. Sir, how come these three different companies, which is prepared by three different chartered accountants, audited by three different firms, how come everybody has the first component as the balance sheet, first page as the balance sheet, first presentation as a non-current asset, first line item as a property, plant and equipment? Why? Because Ind AS 1 says your first component is balance sheet. Ind AS 1 says. Okay. Ind AS 1, para number 54 says that property, plant and equipment is the first line item, is the minimum line item. Schedule 3 says in the format PP comes on the top. So friends, this Ind AS 1 also ensure not only from the last year to current year, it also ensure the comparability of financial statement between the other entities as well. To set overall requirement for the presentation of financial statement. To set overall requirement for the presentation of financial statements. Guideline for their structure and minimum requirement for their content. This standard also provides you overall requirement for the presentation of the financial statement. What is their structure? This also provides you, this does not provide you format. It provides you guidance that what should be the minimum line item in the P&L, in the balance sheet, in the other things, right? Minimum requirements for their content. Minimum requirements for their content. Okay. So this standard talks about these aspects. Coming to the scope of the standard. This standard is applicable in preparation and presentation of general purpose financial statement in accordance with Indian accounting standard. This standard is not applicable in preparation and presentation of special purpose financial statement, tailored made financial statement. No, right? This standard is applicable in the preparation and presentation of general purpose financial statement. Other Ind AS sets out the recognition, measurement, presentation, and disclosure requirement for a specific transaction and other events. This standard gives you a guidance. Para number 54 of Ind AS 1. It says that property, plant and equipment is the minimum line item which is required to be presented on the face of the balance sheet. This talks about this is given by para number 54 of Ind AS 1. But how this property, plant and equipment is going to be recognized? At what value the property, plant and equipment is going to be measured? And what are the disclosure requirement of property, plant and equipment? This is not taken care by Ind AS 1. Who has taken care of this requirement?
Sorry, Ind AS 16.
Ind AS 16. When you read Ind AS 16, and I will teach you Ind AS 16, Ind AS 16 gives you a guidance about recognition, measurement, presentation, and disclosure of property, plant, and equipment. Okay. Deferred tax. Deferred tax is one of the line item on the face of the balance sheet, which is given in the format of the financial statement by Schedule 3 and which is also covered by Ind AS 1, that you need to present deferred tax asset or deferred tax liability as a minimum line item on the face of the balance sheet. But how this deferred tax asset is going to be measured? It is going to be computed. What are the disclosure relating to the deferred tax asset and liability? Is it covered by Ind AS 1? Answer is no. Which standard has covered these requirements? Ind AS 12.
So Ind
12.
Ind AS 12. Ind AS 12 is a standard which talks about deferred tax asset recognition, measurement, presentation, disclosure. The presentation aspect in the balance sheet is also given by Ind AS 1 and Schedule 3, but the recognition, measurement, and disclosure requirement has been inculcated in the other standards. Clear? It is not applied to structure and content of condensed interim financial statement under Ind AS 34, except for general features. Friends, you know, all the listed companies are filing their results, are publishing their results on a quarterly basis. Are you aware? All the listed companies?
Yes.
yes, sir.
Yes, as per the SEBI LODR requirement, all the listed companies are required to prepare their financial statement on an interim basis. They need to publish their results also. They are filing their financial statement on an interim basis. Yes? ये आपको पता है ना?
Yes, sir.
Okay.
Yes.
So friends, if I talk about this interim financial statement, which are condensed financial statement, you are not required to prepare a full-fledged financial statement on an interim basis. You are required to prepare condensed financial statement. Okay. Friends, Ind AS 34 has given you a guidance on the condensed financial statement, condensed interim financial statement. Okay. So, Ind AS 1 is not applicable as far as structure and content is concerned. As far as structure and content is concerned, Ind AS 1 is not applicable on the interim financial statement. Okay. But Ind AS 1 is applicable to interim financial statement as far as general features is concerned. What is meant by general feature? What is meant by general feature?
Like rounding off.
Like rounding off. Very good. Like financial statement has to be prepared on a going concern basis. Financial statement has to be prepared on accrual basis. So even though your interim financial statement are also required to be prepared on a going concern basis, it is also required to be prepared on an accrual basis. आप जब interim financial statement बनाते हो, for example 30th June, 30th September, 31st December, even in the interim financial statement you are looking at, the auditors are looking at, the management is looking at whether we will be able to continue in the near future in the going concern, right? So everybody is looking at these aspect. Everybody is looking at these aspect. Clear? So interim condensed financial statement के structure and content पे Ind AS 1 नहीं लगता. Ind AS 1 के जो general feature हैं वो लगते हैं condensed financial statement. This Ind AS 1 is equally applicable to all entities, including those entities which are presenting consolidated financial statement. So in consolidated financial statement, the balance sheet, P&L, statement of changes in equity, cash flow, and notes to accounts. Ind AS 1 is also applicable to the consolidated financial statement as well. Is that clear? It is also applicable to the consolidated financial statement. Is this clear?
Yes, sir.
Clear? Yes.
Yes, sir. Clear, sir.
So we cover the objective and scope. Now let's move on. So definition of general purpose financial statement we have already covered. General purpose financial statement are those financial statements which are intended to meet the need of user who are not in a position to require an entity to prepare reports tailored to their particular information needs. Like I told you, Geet cannot ask a specific information from Reliance CFO. Mr. Ambani can ask, Geet cannot ask. Chitra cannot ask. Praveen cannot ask. Alok Garg cannot ask. So that is why, to protect the interest of the user of the financial statement, right? General purpose financial statement required to be prepared as per Ind AS and Schedule 3, so that the general need of the users can be met. Right? Clear hai na? Is that clear?
Yes, clear.
Yes, sir.
Very good. Very good. Yes. So friends, now Ind AS, what are Ind AS? Ind AS are the converged version of IFRS applicable to India. Ind AS are the Indianized version of IFRS applicable to India. Ind AS converged with IFRS are prescribed under Section 133 of Companies Act 2013. Friends, under Section 133, don't be surprised. Under Section 133, accounting standard as well as Ind AS. Accounting standard as well as Ind AS both are notified. AS as well as Ind AS both are notified. Accounting standard and Ind AS both are notified under Section 133 of Companies Act 2013. Right? Accounting standard भी वही notified है और Ind AS भी वहीं पे notified है. Perfect? Clear? Okay.
Yes.
Then material. What is meant by material? You will found at a lot of places the word materiality is used, but the threshold is not defined. The subjective definition is there, right? The companies are drafting their policy regarding materiality using the guidance given in SEBI LODR or some other standard, right? So, but the subjective definition of materiality is there. Information is material if omission, misstatement, or obscuring would impact the decision-making capacity of the user of the financial statement. Okay. For example, let me take the Manish. For example, Manish wants to invest in a textile company. And Manish wants to invest 100 crore rupees in a textile company. So Manish asked his consultant that I need to invest in a textile business. So Manish told sir there are two. So his consultant told sir there are two companies, company A and company B. So Manish looked at the financial statement of company A and company B and he found that company A and company B's are identical companies in terms of revenue, in terms of balance sheet size, in terms of solvency, liquidity, everything. Company A and company B are identical companies. So he is indifferent whether he should go with company A or company B. And he has to invest 100 crore rupees. Friends, in this case, in this particular case, this company A and company B, in this particular case, company A, balance sheet, P&L, cash flow, everything, notes to accounts is identical to company B. Company A does not have any contingent liability. Company B has got a demand, has got an income tax order of 50 crores, has got a demand of 50 crore, but company B has not disclosed the contingent liability. Friends, whether this contingent liability is a material information, whether this contingent liability is a material information.
Yes, it is.
Answer is yes. So tell me, had this contingent liability disclosed in company's B financial statement, whether Manish would be able to take his decision or not? Because company A and company B is identical in all aspects. But what is the difference? The difference is company A does not have any legal order, but company B got a legal order for this contingent liability. Okay, company B got the order of contingent liability. So friends, when Manish look at the company B notes to accounts, when he found contingent liability, of course, he will say that the safest investment of 100 crore is not in company B, it is in company A. What happens if tomorrow this income tax order will go worst, will go negative? Then this company is obligated to pay 50 crore rupees, or even though if some concession, some relaxation will be there, so it may end up paying 25, 30, 40 crores, right? So this will be a material information, right? The omission of this information has impacted the decision making capacity of the user of the financial statement. Had this information been given, of course his decision will dramatically change, and he will say that I will invest in company A, and if I need to go to company B, my value of the share should go down. I mean to say, for 100 crores, I should have acquired more stake. Whether you agree or don't agree with me. Yeah. Omission. Misstatement. Misstatement means making a false statement. Making a false statement. Let's say, if I'm not a chartered accountant, but if I write CA as a prefix in my name, so this is a misstatement. You guys are, trusting on me, looking at CA as a prefix, right? So these are kind of a misstatement where the user of the financial statement are relying on the information which is disclosed by the company, and which is a wrong information, which is a misstatement. Okay. Obscuring. What is meant by obscuring? Obscuring means spreading the information. There is a material information, there is a critical information, there is a material information, and spreading the information in bits and pieces so that the relevance of the information goes down. The user of the financial statement will not be able to appreciate the relevance of that information. And let me give you an example in your real life. If a student who knows, if a child who knows that I will fail in exam, what he started doing at his home? He will start with a context. पापा, इस साल का सिलेबस बहुत ज्यादा है. ओके, मतलब एग्जाम देने से लेकर रिजल्ट आने तक. पापा, this time question was very tough. And more than 50% of the student, they have just left the class. They have just left the class after 1 hour. I tried to manage for 2.5 hours, but majority of the students have left the class in just 1 hour. The question was very tough. Everybody was saying, we don't know whether we'll be able to crack this exam or not. So this child is giving a piece of information on a continuous basis at a different point of time, right? Just to make this information irrelevant. So when the result will come and when the student will get failed, of course, this will have an impact. But in the ear and eyes of his father, he says that, you remember Papa, I told you, मैंने आपको बताया था 1 महीने पहले कि सारे आधे बच्चे फेल हो गए, सबका यही हाल है, ऐसे है वैसे. So this is known as a obscuring. So if a company which wants to disclose a material information, but at the same time it wants to hide the material information, what this company will do? This company will scatter the material information into bits and pieces at various places so that the relevance of the information cannot be understood by the user of the financial statement in entirety. Okay, this is the meaning of obscuring, right? Had the entire information has been given at a single place in the notes to accounts, probably this would have been more meaningful, more powerful. Clear? Is that clear?
Yes, clear.
Saminathan, is that clear? You wanted to explain me the meaning of obscuring? ये बच्चे वाला एग्जाम्पल आप लोगों को समझ आया नहीं आया? ऐसा होता है नहीं होता है?
Yes, sir. Negative talk.
Yes, sir. Clear, sir. Thank you.
And this happens in real life also. Okay. Yes. So purpose of the financial statement. What is the purpose? The financial statement gives you structured presentation of financial position, financial performance, and cash flow. Which component gives you the structured presentation? Which component gives you the structured presentation of the financial position?
Balance sheet.
Which component gives you the structured presentation of financial performance?
Statement of finance.
Statement of profit and loss account.
Statement of profit and Statement of profit and loss, right? It is not a statement of profit and loss account. Either it is a statement or it is an account, right? So it is a statement of profit and loss. And why I am emphasizing on these words, recently I was surprised with the NAFRA investigation, NAFRA report, NFRA report on IGSEC Company Limited, IGSEC, right? So you know what NAFRA told? That NAFRA told that the company has used the title. The company has used the title as cash flow statement. For cash flow, the company has used the title cash flow statement. It has to be a statement of cash flows, right? Ind AS 7 is a statement of cash flows. It says that a statement of cash flows. Okay. Is that clear?
Yes, sir.
Yeah. So a statement of cash flows. So basically the title, the words, these are very important. It is not statement of P&L account. It is statement of profit and loss. Okay. So financial performance. And what is financial performance? So which component gives you financial performance? Statement of profit and loss and statement of changes in equity. A statement of changes in equity gives you the shareholder performance. It gives you shareholder funds, right? It gives you that kind of performance. It gives you that kind of performance. Okay. So your how your reserves are performing. Okay. How your P&L is performing. Then statement of cash flows. Which kind of so which component gives you the liquidity performance, the cash flow performance? Is statement of cash flow. A statement of cash flow gives you liquidity performance, right? So this financial statement gives you a structured presentation of financial position, financial performance, and cash flows. Is it clear or clear?
Clear, sir.
Friends, these are very basic kind of information, basic learning and presentation. But believe me, for a chartered accountant, for a CA final student, for an aspiring chartered accountant, these are very important, very relevant things to know and to learn. Very important. At least you should be aware what is the component of the financial statement, what is the element of the financial statement, what presents what, right? Now we have entered into the main Ind AS 1 category, main Ind AS 1 component of the financial statement, balance sheet. Since morning, I have shown you balance sheet 2 times of which company?
Britannia.
Britannia.
Britannia Industries Limited. Britannia Industries Limited, right? So non-current asset, current asset, equity, non-current liability, current liability. After balance sheet, I have shown you statement of profit and loss also. You remember revenue from operations, other income, total income, expenses, profit before tax, current tax, deferred tax, profit after tax, other comprehensive income, total comprehensive income. Have I shown you? Statement of profit and loss. The format is
Yes,
given
sir.
in Schedule 3. The balance
Yes,
format
sir.
is given in Schedule 3, right? So statement of profit and loss, the new section is other comprehensive income, right? We will discuss this. We will discuss this in detail. Statement of profit and loss, other comprehensive income. Then there is a statement of changes in equity. Have I shown you statement of changes in equity? What is the meaning of this equity? What is the meaning of equity? Is it only equity share capital? Whether this statement present only changes in equity share capital?
Other equity.
Other equity also, right? So Neha, is it only equity share capital or other equity also?
Other equity also.
Other equity also. What is other equity? It's a reserves and surplus. Reserves and surplus. Okay. Very good. Very good. Other equity also. Right. So it shows the movement of equity share capital and other equity. Then what is the next statement? The next statement is cash flow statement. Is it a cash flow statement or a statement of cash flows? This is a statement of cash flows. Purposely I kept its adhesive. Statement of cash flows. It is not cash flow statement, it is statement of cash flows. Friends, but today, after this class, can you please keep on mute? Everybody, please keep on mute. Everyone, please keep on mute. Yes. Friends, After today's class, for example, if you will go to your client place, and that client is preparing the financial statement as per accounting standard, then the word will be statement of cash flow or cash flow statement.
Cash flow statement.
In accounting standard, in division 1 to schedule 3, it will be cash flow statement. In Ind AS, it is a statement of cash flows. Right? Statement of cash flows. Notes, then notes to accounts, right? Notes to accounts are integral part of the financial statement. Notes to accounts are the integral part of the financial statement. And what is notes to accounts? It provides you क्या notes to accounts में क्या आता है?
Detailed
explanations regarding any item of balance sheet.
It provides you basis of preparation. It provides you corporate information. It provides you accounting policy, material accounting policy. It provides you explanation of balance sheet line items. It provides you P&L items explanation. It provides you other disclosure as well, like related parties, segment reporting, etc., etc. Okay. So accounting policies and explanatory notes. Then there is a comparative information. How many year comparative is required?
2 years. Last year. 1 year, sir.
Comparative is 1 year. The total information is for 2 years. Current year and comparative year. Current year and comparative year. Okay. Current year as well as comparative year. Is that clear?
Yes, sir. Also, if there is any difference, comparison difference is more than 25%, that also to be disclosed.
Only in case of ratios. So
only in case of ratio.
Only in case of, not in case of balance sheet, P&L, right? Only in case of ratios. That is a requirement of Schedule 3. Every line item of balance sheet, if the variance is more than 25%, does not require any kind of explanation. Okay. This is only applicable for the 11 ratios which are part of Division 2 to Schedule 3. Okay. Clear?
Okay, sir. Got it, sir.
But comparative information, 1 year comparative means last year, is required for all the component of the financial statement. In balance sheet, in P&L, in cash flow, in statement of changes in equity, everywhere 1 year comparative is required. Then the last one is very important in the new item. Third balance sheet. Have you heard about the concept of third balance sheet? Geet is asking, just hold on. Geet is asking, sir, 1 year comparative for normal, 2 for first Ind AS financial statement. You are right, Geet. So Geet, when the company is preparing the Ind AS financial statement for the first time, when the company is adopting the financial statement under Ind AS for the first time, then Ind AS 1 is not applicable. What is applicable? Ind AS 101 is applicable. Ind AS 1 is also applicable, but regarding the component Ind AS 101 will be applicable. And 101 says that the two comparative will be there. Current year, of course, there. Last year comparative, of course, there. And opening balance sheet, opening of the comparative is also required. Opening of the comparative is also required. Third balance sheet is also required in case of first time adoption of Ind AS, okay, which is as per Ind AS 101. But third comparative is also required in balance sheet. Third balance sheet is also required. Opening of the comparative period balance sheet is also required in 2 places, right? While it's 3 written as a 3 line items, but in 2 places largely. When there is a correction of prior period error, and when there is a correction of prior period error, and when there is a change in accounting policy. There is a correction of prior period error, and when there is a change in accounting policy. When there is a change in accounting policy. Friends, let me discuss this correction of prior period error and change in accounting policies. This third balance sheet concept, let me discuss with all of you. First of all, please let me know if my Excel file is visible to all of you. Please confirm.
Yes, sir, visible.
Friends,
yes, sir, visible, sir.
Let's say if the current year is FY 2024-25, tell me what is the balance sheet date? What is the balance sheet date?
31st March.
31st March 25.
Very good. Perfect. If the comparative year is 23-24, of course, if the comparative year will be 23-24, right? What is the comparative balance sheet date? 31st March 24. 31st March 24 is the comparative balance sheet date, right? Friends, what is the opening date of the comparative period? What is the opening date of the comparative period?
1st April 23.
1st April 23. Very good. 1st April 23. Opening date of the comparative period. 1st April 23. Any doubt here? Any doubt? Clear? Current
Clear,
year,
sir.
31st March 25. Last year, 31st March 24. And opening of the last year, opening of the comparative period, 1st April 23. This is the third balance sheet. This is known as a third balance sheet. This third balance sheet needs to be prepared when the company has done a prior period error or the company has changed the accounting policy, right? Let's understand this in more detail, right? Friends, whenever the company is correcting the prior period error, the provision under Ind AS and IFRS are very stringent. In ICAI, in accounting standard, in ICAI, it was very simple. It was very simple. You know what was it? Very simple. It only says that, for example, the previous year errors, the past period errors you have detected today, not to worry. Not to worry. Do one thing. Do one thing. If you have detected it today, do one thing. What? Whatever is the impact of the error, take it in the current year P&L as a prior period item. हाँ या ना? यही होता था ना?
Yes.
Yes. Take this in the current year P&L as a prior period item. Take the impact of the error and enjoy your life. No requirement of last year restatement. No requirement of giving the third balance sheet. Okay, but in Ind AS it is very typical. Friends, just allow me a minute. Sorry guys. Yes. So friends, let's understand the provision of correction of prior period error or change in accounting policy impact with the help of this example. And then I will show you the real life example also. The real life listed company annual report. Okay. Very, very, very important. And question has come in the exam relating to this area also. You should be able to know how should you correct the prior period error. What are the disclosure? A Limited purchased a machine for rupees 1 lakh on 1st April 2016, having a useful life of 10 years. A Limited purchased a machine for rupees 1 lakh on 1st April 16 for rupees. A Limited purchased a machine for rupees 1 lakh on 1st April 16, having a useful life of 10 years. Okay. So 1 lakh rupee is the cost. Life is 10 years. What is the depreciation?
10,000.
10,000. In considering residual value is 0. Okay. The accountant has wrongly passed an entry of for rupees 10,000 instead of rupees 1 lakh. What this accountant has done? He has passed an entry of 10,000 instead of 1 lakh. So what entry he was supposed to pass? Machine account debit to cash account by 1 lakh. What entry he has passed? Machine account debit to cash by 10,000. So what is the impact of this error? It becomes a compensating error. It becomes a compensating error. Your machine is understated by 90,000. Your cash is overstated by 90,000 in the books of accounts. Yes or no? Your cash is overstated. बुक्स में यही हुआ ना, मशीन अंडरस्टेट हो गई, कैश ओवरस्टेट हो गया. Yes. Now, Neha is the auditor of this company. So Neha got this assignment, and his CA has sent her on this audit in the financial year 2021 to finalize the financial statement of 2021. When she was auditing this company, when she looked at the fixed asset register, she found that there is some problem. This machine cannot have a gross block of 10,000. This machine is expensive. So she digged out the invoice. She asked for the invoice. The accountant told, "Madam, why you are asking this invoice? This machine was purchased in 16-17. Then Neha told, "Doesn't matter. This machine is still coming into this balance sheet na? हाँ या ना? मशीन तो बैलेंस शीट में आ ही रही है ना? And I will certify, and we will also certify this year balance sheet also na. So this is not like, this is not an expense. This is not a P&L item which gone then gone, right? We are certifying cash balance. We are certifying PPE. We are certifying retained earning, right? So the balance sheet numbers are carried forward and brought down. So we are certifying this year balance sheet also, and hence I am entitled to see the invoice of 1st April 2016. So when she got the invoice, she was surprised. This error was found when she was auditing the financial statement of A Limited for FY 2021. She found that the cost was wrongly booked as a 10,000 rupees. The machine was understated by 90,000. Cash was overstated by 90,000. Right? This is what it is there. Actual cost of machine was 1 lakh. 1st April 16 was the date and 10 year was the life. Then tell me, 16, 17, 17, 18, 18, 19, 19, 24 years have gone. 2021 is the current year. The books are open. What happened in the last 4 years? Tell me. What is the impact? What is the impact? इसका impact क्या है? Pitambar, please tell me.
Depreciation short charge.
Depreciation short charge. Every year the depreciation short charge by 9,000 rupees. 10,000 divided by 10, 1,000. It has to be 10,000, but it's been charged as a 1,000 rupees. So every year in the last 4 years, depreciation short charge by 9,000 rupees. What is the balance sheet impact of this depreciation short charge? When depreciation short charge, your P&L goes up, your profit increased. Yes or no?
Yes, sir.
Your profit got increased. When your profit got increased, your retained earning, profit will move to retained earning. It will transfer to retained earning in the balance sheet. Then it goes to retained earnings. Retained earning. So resultant, what happened with retained earning? Retained earning got increased for the last 4 years. Yes. Machine net block. Machine net block was also not showing a right picture. Yes or no? Cash was also not showing the right picture. Yes or no? So these were the impact. Now, Ind AS says that when you prepare your current year financial statement, your current balance sheet, of course, you will prepare your current year balance sheet, which is FY 2021. What is the balance sheet date for FY 2021? What is the balance sheet date for FY 2021? 31st March 21, right? These accounts are open. You will prepare now, okay? There is a comparative balance sheet for FY 19-20 also, which you are required to give, which you are required to provide. You need to restate the comparative balance sheet. You need to restate your comparative numbers. And what is the opening? If you need to restate your comparative number, which is 31st March 20, you need to correct the opening balance also. What is the opening of the comparative period? The opening of the comparative period is 1st April 2019. It means you need to correct the comparative, you need to correct the opening of the comparative number also. Okay, opening of the comparative number also, right? So you need to correct the opening balances. You need to correct the opening balance sheet. And what is 1st April 19 balance sheet? 1st April 19 balance sheet is equal to 31st March 19 corrected balance sheet. 31st March 19 corrected balance sheet. Friends, when I will correct my opening balance sheet, what does it mean? It means that I need to take an impact from the date of the error till the opening balance sheet. Yes or no? ऐसे तो ठीक होगी ना? आपके बैलेंस शीट के नंबर तो ब्रॉट डाउन और कैरी फॉरवर्ड होते हैं ना?
Yes, sir.
Yes, sir. Yes.
Yeah. And how should I correct this? So tell me, up to 1st April 2019, how many financial year were there up to 31st March 2019? 1st April 2019?
3 years.
16, 17, 17, 18, 18, 19. What was the impact of the error in the P&L? 27,000. The depreciation from FY 17 to FY 19, the depreciation was short charged by what amount? 27,000. Yeah. 9 into 3, 27 हुआ ना?
Yes, sir.
Yes.
27,000.
So I need to correct my opening balance sheet. So how can I correct my opening balance sheet? I need to take an impact from the date of the error till the date of the opening balance sheet date. So friends, what was my machinery balance? If everything goes correct, what would have been my net block as on 1st April 19? 1 lakh was the gross block. 30,000 should have been the depreciation. 70,000 should have been the correct net block, right? And cash should have been credited by 1 lakh instead of 10,000. सही है ना? यही होना चाहिए था ना? 1st April 16 के हिसाब से 31st March 19 को 70,000 should be my net block and cash should have been credited by 1 lakh rupee instead of 10,000 rupees. What has happened? Your wrong net block is 7,000 on 31st March 19, which is 1st April 19. And what is the difference in the net block? 63,000. Your balance sheet number is understated by 63,000 on 1st April 2019. And your cash has been credited by 10,000. Your cash is also short credited by 90,000. So friends, what is the accounting entry you will pass on 1st April 19? You will debit machinery by 63,000. You will credit your cash by 90,000. And you will also debit your retained earning by 27,000. Machinery debit 63, retained earning debit 27, cash credit 90. Whether this entry is clear to all of you or not clear, please tell me. Whether
Yes, sir.
Is clear or
sir.
not clear?
Clear, sir.
Anyone to whom this entry is not clear? Anyone, my dear friends, my dear students, anyone to whom this entry is not clear? सबको clear है ये entry?
Yes, sir. Clear in mind.
Clear in mind? Okay. So what we will do in this opening balance sheet, we will add machinery by 63,000. We'll deduct cash by 90,000. The impact on the asset side is negative 27,000. And we will also reduce retained earning by 27,000. This is how your balance sheet got tallied. Is that clear? Is that clear?
Yes, sir.
Yeah. Yes. So friends, then there is an opening P&L, there is an opening balance sheet. Is there any concept of opening P&L? P&L cannot be opening. P&L cannot be opening. Why? Because P&L is for the period. Balance sheet is as on date. Okay. So there is nothing called opening P&L. Okay. P&L number never brought down and carry forward. So friends, then what about the comparative balance sheet? Comparative numbers are required to be restated. So when you pass this entry in 1st April 19, tell me whether this entry impact will come into the 31st March 20 balance sheet or not.
Yes, sir. It will come by depreciation. We need to reduce it.
Yes. So no. So what I'm asking, you added 63,000. You added 63,000. You reduced 90,000. You reduced 27,000. These balance sheet numbers, this balance sheet entry, whether this balance sheet entry will have an impact in the current year, and the comparative year also, answer is yes. होगा ना, बैलेंस शीट नंबर तो कैरी फॉरवर्ड होते हैं ना.
Yes, sir.
Yeah. So whatever you have presented on 31st March 20 versus whatever you will restate, there is an additional impact of 9,000 rupees of depreciation. Yes. And in the comparative P&L, because comparative numbers you are presenting, so you will also present comparative P&L. Your depreciation expense will be added by 9,000 rupees and your net block will reduce by 9,000 rupees. Your cash will be same. The wrong balance versus the revised balance will be 90,000 reduction, and this retained earning on 31st March 20 restated retained earning versus the last published retained earning, there is a difference of 36,000. Is that clear? Whether these impacts are clear to everyone or no?
Yes.
Is
Yes,
it
sir.
clear
Clear, sir.
or not clear? Clear in mind or clear from mind? I wanted myself to be clear that whether it is clear to all of you or not. Now I will ask some question and I'll answer those questions. Then I'll show you one of the listed company annual report where everything will get clear if it is not clear. Friends, sir, like, Neha got this error in FY 2021. Sir, whether this comparative year restatement and preparation of the third balance sheet, whether it is required in the current year financial statement or do we need to refile our old financial statement? Tell me what to do.
Current year.
This is required only in the current year. This is required only in the current year. Only in the current year. Right. So Geet is saying, sir, but in real life, bank balance is at least tallied with the bank statement during audit. So Geet, that is why I am talked about cash balance. And that was an error, that was oversight which was happened. गलती तो होती है ना गीत, गलती आज भी बहुत होती है. This is just one example which I have taken so that you guys will be able to understand the impact of those errors. My intent was not to highlight what is the kind of error. My intent is to highlight what is the provision of correction of error. Okay. Yes. So friends, earlier year financial statement are not required to be refiled. Whatever is filed, it has been filed. Everything has to be done in the current year. Okay. Sir, whether I need to open my old Tally, ERP, SAP? No. You have to account for the entry in the current year by giving it in narration that this entry belongs to 1st April 19. But you have to pass the entry in the current year. Sir, whether I need to refile my revised income tax return also, you have to look at the income tax provision regarding that. Right? So let me show you one of the listed company annual report, which is very important, very relevant, one of the listed company annual report. And just allow me a minute. I am opening that listed company annual report where you will be amazed. You will be very happy to see that annual report on this third balance sheet concept. Just a minute. I am opening ONGC annual report. I am opening ONGC annual report. Please let me know if this ONGC annual report is visible to all of you. Have you heard about this company, Maharatan Company, ONGC Limited? Have you heard about this company, ONGC Limited?
Yes, sir.
Let's go to the ONGC Limited, and this is the annual report of ONGC for the financial year 1920. Okay. So ideally, 1 year comparative should have been there. Ideally, yes. But let's look at how many year comparative is given. This is the balance sheet of ONGC Limited for standalone balance sheet as at 31st March 20. Can you see 31st March 20, 31st March 19? What is the current year? 1920. What is the comparative year? 1819. What is the opening date of the comparative period? What is the opening of the comparative period?
1st April 2018.
1st April 18. Yes. So can you see this 3 balance sheet? 2 comparative, can you see? Why this 2 comparative is there? Why this opening of the comparative period balance sheet is there? Why the third balance sheet is there? Because either the company has corrected the prior period error or the company has changed the accounting policy, right? And there is a star mark. There is a star mark in the comparative year and in the opening of the comparative year. What is the meaning of this star? क्या मतलब है इस star का?
Restated.
Restated. Awesome. Very good. Restated. Let's go to the star mark. Restated, refer note number 54. We'll go to note number 54 also, right? Then let's go to the P&L. There are 2 P&L or 3 P&L?
2.
P&L will always do. Current year and comparative year, right? P&L. So current year, year ended 31st March 20, year ended 31st March 19. There is again a star mark in the P&L, comparative P&L. Current में नहीं है star, comparative में. So what is the meaning of this star? What is the meaning of this star? Restated, refer note number 54. Then there is a statement of changes in equity. In a statement of changes in equity, there is a statement of changes in equity, right? There is a equity share capital, then there is a reserves and surplus. Balance as at 31st March 18, effect of change in accounting policy. Then there is a restated opening balance. Balance as at 1st April 18. So friends, in ONGC, this third balance sheet concept is because of error or because of change in accounting policy?
Change in accounting.
Because of change in accounting policy. नाम अलग है but काम exactly same है. नाम अलग है but काम is exactly same. Saminathan is asking, sir, whether CFS is also required. Third balance sheet answer is yes. Okay. Yes. So now go to the statement of cash flow. Statement of cash flow. Again, 2 statement of cash flow. Again, there is a star mark in the comparative statement of cash flow. Why? Because your cash flow comparative is also changed ना. You will start with profit before tax. तो वो भी तो आपका चेंज हो गया इस चेंज इन अकाउंटिंग पॉलिसी की वजह से. What is the meaning of this star mark? Restated, refer note number 54. Shall I go to note number 54? Shall I show you the magic? Note number 54, and you will be amazed to see that the kind of detailed disclosures are there for this change in accounting policy or correction of error. Friends, this third balance sheet concept is in Ind AS 1 and Ind AS 8 both, right? In both the standard, the same concept is there, right? Disclosure as per Ind AS 8. Disclosure as per Ind AS 8. Accounting policies, changes in accounting policies, changes in accounting estimate and correction of errors, right? Disclosure as per Ind AS 8 and Ind AS 1. Okay. I haven't taught you Ind AS. मैंने आपको अभी तक Ind AS 8 नहीं पढ़ाया, but the same concept is there in Ind AS 8 also, right? So when I'll teach you Ind AS 8, that will be a revision of Ind AS 1. Okay. In accordance with Ind AS 8 and Ind AS 1, the company has retrospectively restated its balance sheet as at 31st March 19 comparative balance sheet and 1st April 18, which is opening of the previous period, and statement of profit and loss for the year ended for the reason is stated below. They have explained what are the reason. So let me tell you the reason. They have changed the accounting policy of government grant, right? I'm not telling you what change, no change. They have changed the accounting policy of government grant. Okay. Then they have provided the reconciliation of already published accounts. As I told you, na, the last year financial statement are not required to be refiled. मैंने आपको बोला है ना last year का दोबारा फाइल नहीं करना. तो what they have given? They have given the balance sheet reconciliation, that these are the balance sheet item, asset and liabilities. These are the previously reported 31st March 19, adjustment and restated. 1st April 18, third balance sheet. Previously reported 31st March 18 reported, adjustment and restated, right? This is what it is given. Reconciliation of P&L. Previously reported, adjustment and restated. Okay. Is that clear? Previously reported, adjustment and restated. So you can see all the impacted item, they have given the reconciliation because P&L is only for the last year, and that is why they have given the reconciliation for the last year P&L with adjustment and restated. And they have also explained that what is the adjustment. What is the adjustment? And they have also given the impact on the basic and diluted earnings per share. They have also given the reconciliation of cash flow, what is already reported, what is already published in the last year, what adjustment they have done, and what is the comparative number in the current year, restated number. And then they have given the explanation of all the adjustments. They have given the explanation. So friends, in IGAP, in accounting standard, whenever there is a correction of prior period error, or whenever there is a change in accounting policy, the calculation was retrospective, but the application was prospective, right? मतलब कैलकुलेशन इम्पैक्ट तो पूरा कैलकुलेट होता था, बट उसकी एप्लीकेशन करंट ईयर में होती थी. बट इन Ind AS, the calculation as well as application is retrospective. You need to restate your comparative balance sheet, and you need to also provide the opening of the comparative balance sheet, where from the date of the error or from the date items where the change in accounting policies impact is there, from that date to the opening balance date of the comparative period, you need to capture all the impact in the opening balance sheet, correct the comparative balance sheet, means last year end balance sheet, and correct the current year balance sheet, right? For P&L, you need to restate your comparative P&L, you need to restate your comparative cash flow and your comparative statement of changes in equity, right? And you need to provide the reconciliation of already balance sheet which you have published versus what is the number you are restating, and the P&L and the cash flow also. And you need to provide the reason for the error or for the accounting policy, and the impact, you need to explain the impact as well. Friends, with this, have you been able to understand this concept or not? With this ONGC annual report, are you able to appreciate what I have explained you on the Excel file, what I have explained you through my verbal explanation, and what I have shown you from the large listed companies of India?
Yes, sir.
Yes, sir.
So friends, we have covered this first part component, and in the next class, I will cover this Ind AS 1 completely with few questions as well. But whatever I have told you today relating to Schedule 3, Division 2 to Schedule 3 and Ind AS 1, is it clear to you completely or not?
Yes, sir. Complete.
Yes, sir.
Any
Sir,
question?
I
Any
have
doubt?
one doubt.
Yes.
सर ये जो न्यू मतलब ये बैलेंस शीट पीएनएल दिखाया है, तो ये एज ए होल एंड फुल है ना, जो मतलब सब में ही एडजस्टमेंट दिख रहा है, तो ऐसे भी रहेंगे जिसमें एडजस्टमेंट नहीं हुए रहेंगे,
हाँ,
वो भी शो है
जैसे
इसमें?
यस, तो आपको देयर आर टू एस्पेक्ट. कई लोग क्या करते हैं कि रिकंसिलिएशन में पूरी बैलेंस शीट के सारे आइटम दिखा देते हैं, कैश फ्लो और पीएनएल के पूरे आइटम दिखाते हैं. जहां जहां चेंज नहीं होता डैश डैश छोड़ देते हैं. इन्होंने क्या किया, जहां पर भी बैलेंस शीट पीएनएल कैश फ्लो की लाइन आइटम इंपैक्टेड है, बस वो लाइन आइटम दिखाई. ओके, सो बोथ द मेथड्स आर अलाउड. अगर पूरी बैलेंस शीट दिखाते और जहां पर इंपैक्ट नहीं है तो क्या करते, उसको डैश डैश करके छोड़ देते. Whatever is the last year reported number, that will be the currently reported number also. ठीक है?
Yes, sir.
Any further question? Chitra, any question? Yes.
So last class Excel note and this class notes.
So I will check with Board of Studies of ICAI, and definitely I will get it uploaded, right? Okay. Any further question? So all of you who are taking these classes for the first time for financial reporting, right? Today's class and then the last class, we set the context. We set the context, okay? We understood the relevance of Ind AS, kind of Ind AS. We have dual framework, accounting standard and Ind AS, Schedule 3, Ind AS 1. So we have discussed the presentation, component, element, right? So these are very relevant for setting the context for the entire life, okay? So then we will get into the relevant standard. So friends, I hope you found the sessions useful. I hope you are able to understand and grab from the classes. Thank you so much. Okay. And these classes are available always. You can just go and listen these classes again and again whenever you are traveling, whenever you are moving from one place to another. I think this will help you. Thank you so much, guys. Bye-bye. Take care.
Thank you, sir.
Stay happy.
Bye-bye.
Thank you, sir. Thank you so much.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you. Thank you, Geet, for this wonderful feedback. Thank you.
Yes, Ashok ji.
Recording stopped.
Thank you, sir.